Good afternoon, members. Welcome back for the third session for the day. The topic being recent technical amendments on GST and practical issues while filing GST returns. To handle this session, we have CA Annapurna D Kabra, ma'am. I welcome you, ma'am. I request CA Manjunath M. Allur, Secretary of Bangalore Branch, to escort her onto the dais and welcome her with a floral bouquet. Annapurna Kabra is a fellow member of the Institute of Chartered Accountants of India. She is a practicing chartered accountant and is a proprietor of Annapurna and Associates. She has completed a DISA and DIRM program conducted by ICI. She has contributed various articles on VAT and GST and is a regular contributor of articles to various professional journals, including Bangalore branch of ICI, Karnataka State Chartered Accountant Association, SIRC journals. She has also co-authored background material of indirect tax of ICI. She has authored the technical guide to KVAT of ICI. She has co-authored the book on discussion matters on traditional issues towards GST. She has contributed e-lectures to various topics in VAT and GST to the IDT committee. She is also a faculty member to the GST certification course conducted by ICI. She has been appointed as a co-chairperson of State Taxes and GST Committee of FKCCI. With this short introduction, I welcome you, ma'am. Over to you.
Good afternoon. Good afternoon to all the members. Yeah. First of all, I thank Bangalore branch of ICI for giving me an opportunity to share few insights on the recent amendments under the GST law. And we'll be discussing more practical scenarios of GSTR 9 and 9C. As you all know, we are in the season of 9 and 9C, and we are left with another 9 to 10 days for filing our 9 and 9C. So possibly we'll try to discuss a lot of practical issues, how to disclose, because we are able to see with our experience of 17, 18, 18, 19 that we are receiving the notices because of might be wrong filing of GSTR 9, 9C, I can say, or not complete filing of 9, 9C. So there are a lot of issues which are involved in 9 and 9C. So first part will be on the amendments, and then I will be discussing in detail on 9 and 9C, right? So with this background, I would like to begin the session on the recent amendments under the GST law. I think every day, in fact, I was preparing this presentation, I was thinking by the time I reach off this institute, I think there might be some amendment which I have to go through. So that is a span, within that span of time, the amendments are happening in the GST law. So I have picked up some few amendments which has taken place in sections and rules. Though there are so many other amendments, but which is very commonly used to be referred by all of us. I have picked some 30 amendments, and we'll be discussing on that aspects, and will, if possible, we'll also try to see what is the implication of those amendments, right? So with this, the first amendment which we all are aware of as on date, that there is an exemption from filing this annual return, which we are in that where it has been notified through notification 32/2023, where they have notified that if any taxable person is having a turnover below 2 crore, then they are exempted from filing annual return. It is an optional. You can still file it, but it is not required mandate from the law perspective to file your GSTR 9. And if your turnover is not exceeding, aggregate turnover that is not exceeding 5 crore, then you are not required to file 9C, I think. And the due date as on date is for the financial year 2022-23 is 31st December 2023. So that is what they have notified through notification. Then the next very, very important amendment would like to bring before the members is, I think few of the members might be aware of this, but would like to just share what is this notification. This is something called as an amnesty scheme, which has been introduced in the GST law for filing GST appeal on or before 31st January 2024. So this is a kind of a relaxation which has been given for filing the appeal, because the appeal could not be filed beyond the time limitations, because the law specifies that there is a time limit to file the appeal against the order. So section 107 specifies that you have 3 months time limit from the date of receipt of order, in along with 1 month as a condonation of delay. So if you are not able to file the appeal within a specified time, then basically few of the taxpayers have gone to High Court as a writ petition and tried to borrow the additional time. Few of the assessee have just left as it is, and few of the taxpayers have just paid the taxes. So lot of things has happened because of not filing of appeal within the time limitations. So because of this, there is an amnesty scheme which has been introduced. But the only important thing we have to remember is, this is applicable only for the orders which are passed under 73 and 74. Not all the orders, not 63 orders, not 62 orders, or 129 orders, 130, no. This is only applicable if the DRC 7 is passed under 73 and 74 of the GST Act. And next is the regular filing what you are doing for other appeals, the same procedure will be applicable for this kind of appeal also. And the most important is that order should be passed prior to 31st March 2023. That is what you have to remember. That order should be passed prior to 31st March 2023. If it is passed, say in June, September, there is one decision which has come that even the benefit of amnesty scheme should be applicable even for those orders also. But it has not come by way of notification, it has come by way of judgment. But basically this notification says the order should be prior to 31st March 2023. Right? And the order should be under 73 and 74. And next condition is, whenever the taxpayer files the appeal, there is a pre-deposit requirement. The pre-deposit requirement is 10% of your taxes, disputed taxes. Now for this amnesty scheme, you have to additionally deposit 2.5%. So approximately you have to deposit 12.5% as your taxes. Out of that, 2.5% will be from your electronic cash ledger. Okay, so I think I'm very clear with this, what this notification says. The next very important is, this is applicable only if the orders are passed for the taxes. If the orders are passed for the interest, or if the orders are passed for the penalty, then this scheme is not applicable. It can be tax with interest and penalty, but if your orders is purely a penalty order, or if your order is purely an interest order, then this amnesty scheme is not applicable. We have tried to make a representation to the government saying that please allow us even for interest and penalty orders also, but let us, as on date, it is not applicable. So as on date, this amnesty scheme is only for the issues which involves taxes. And the next is, you cannot apply for refund. For example, you would have paid 100%. You would have paid the whole amount of taxes. Now, because of this appeal, because of the scheme, you cannot apply for the differential between 100 minus 12.5 as your refund. So that refund benefit is not applicable, even though you would have paid whole 100% as taxes to the government, right? So this is what is specified in this notification. Now let us try to link this notification with one more very interesting amendment which is going around, and lot of discussions are going on this issue. The next is utilization of your electronic credit ledger. As we all know today, even the circular 172 has specified that you can use your electronic credit ledger for payment of your output tax. Your credit ledger can be used even for your self-assessment tax. Your electronic credit ledger can be used to the taxpayers who have already filed the appeal by using the credit ledger balances. So I think based on this amendment, we have to still wait for the judgment of the Supreme Court. But as on date, you can still litigate and you can reply against that notices saying that circular allows us, sections allows us, and there are favorable decisions, and Supreme Court has stayed on this matter. So still electronic credit ledger balance can be used as a pre-deposit for filing the appeal. You have to just litigate, and if you don't want to litigate, you can still pay from your cash ledger. But let us see the fun part of this. If you see in the amnesty scheme, they are saying 10% should be used from your credit ledger balance and 2.5% should be used from your cash ledger. It means indirectly, government is giving us indication that pre-deposit can be used from your electronic credit ledger balance. This is only one way of your submission which you can make when you receive a notice from the department, right? So this is what is being discussed. Next is, morning I was receiving one of the issues saying that the appellant has filed the appeal manually, right? He has also sent by mail all these appeal documents. He has not filed electronically. Is it a valid filing of appeal? He has filed manually, he has sent by mail, but he has not uploaded in the portal. So they have specifically made an amendment in Rule 108 and 109 stating that all the appeals have to be filed electronically. Only there is an exception saying that if it is notified by the commissioner or where the order is not uploaded in the portal. Only in those scenarios you can still file the appeal manually. Otherwise, all your files, all your appeals should be filed electronically. You cannot say that it is a valid filing by filing manually or by sending by mail. It has to be uploaded in the portal and pre-deposit has to be made while filing the appeal. So this is what has been amended from August 2023. I request all the members to please comply with this. Otherwise, you miss the opportunity of filing and the department can object saying that you have not filed the appeal as per the law. So be careful on this aspect also. Next, most awaited intimations for all of us today, DRC 1C. I think you all know we have 4 intimation. One is DRC 1A, that is prior to show cause notice. DRC 1B, that is the difference between GSTR 1 and GSTR 3B. And DRC 1C is the difference between 2B and 3B. And DRC 1D is a recovery. So they have inserted a new rule stating as Rule 88D, which states that the department can issue DRC 1C by asking you, please explain the reasons between GSTR 2B and 3B. These intimations can come month-wise, so you have to be very careful. If you don't reply to this notice, you have to reply within 7 days. If you don't reply within 7 days, they can initiate the adjudication proceedings under 73 and 74. So while you are replying within 7 days, either you can make a payment by DRC 3 or you have to give the reasons why there is a difference between 3B and 2B. What can be the reasons? You have to tick mark those reasons. Why there is a difference, whether there is a delay in receipt of goods, whether it is due to mistake or omission, whether ITC was availed on import of goods which is not reflected in 2B, or is there any excess reversal of previous period claimed in the current period, or is there any recredit of input tax credit on payment to a supplier, recredit of input tax because of 337A. I mean to say that you have to specify the reasons why there is a difference between GSTR 3B and 2B. It means it's a monthly assessment, monthly intimation. Be careful, we have to reply within 7 days, otherwise it will lead into a adjudication proceeding. One more very serious offense what they have done is saying that if you are not replying, they can stop you from filing your further GSTR 1. Are you able to get? If you are not replying this DRC 1C within the specified time, the Rule 59(6)E is added where they have stated that there is a restriction on filing GSTR 1 for the subsequent period where DRC 1C for excess claim has been issued unless such excess ITC should be reversed or reply explain the reason why there is a difference. So I advise the members, you have to be careful, otherwise it has a serious implication of restricting you from filing your further GSTR1, and it will lead unnecessary into a adjudication proceeding. So any DRC 1C, you have to reply it immediately, right? So this is expected. This will be issued, and accordingly we all have to reply on this. Anything on this? Shall I proceed? If you have anything, you can just stop me in between. Then the next amendment is composition scheme. As you all know, the composition scheme is applicable where your aggregate turnover is 1.5 crore. There are certain restrictions when you are applying for the composition scheme. One of the restriction is if composition supplier cannot supply the goods through an e-commerce operator, right? He cannot supply the goods or services through e-commerce operator. That is one of the restriction. That is one of the condition when he has to apply for the composition scheme. Now they have brought an amendment saying that he can be a supplier of goods. I am saying only supplier of goods, not services. So composition person, taxable person, can be the supplier of goods through a e-commerce operator, and that restriction has been removed, and he is permitted to supply the goods through e-commerce operator. But what are the conditions? The condition is that that supply of goods should happen only within the state. Once you are applying for the composition scheme, you want to supply the goods through e-commerce operator, that transaction should happen only within the state. You cannot enter into an e-commerce operator outside the state, right? And what are the conditions? They should do only intrastate supplies. The e-commerce operator should collect the TCS and remit to the government, and they should file the GSTR 8. Then only the composition supplier will get the benefit of composition scheme. Next. Third schedule amendment is made. What is third schedule? It is neither supply of goods nor supply of services. So the supply of goods in non-taxable territory to another place in non-taxable territory without such goods entering into India, or the supply of warehouse goods before clearance for home consumption, and supply of goods by consignee under specified circuit. These are the transactions which are treated as neither supply of goods nor supply of services. But this has been notified retrospectively from 1/7/2017. So if you would have already paid the taxes on this transaction, you will be not eligible for any refund also. You got the point? Even though it is saying as neither supply of goods or services, if you would have paid the taxes, it is lapsed. Because the notification says no refund shall be made even though you would have paid the taxes on the above transactions. Next, reversal of input tax credit. As we all know, third schedule supplies are not treated as an exempt supply except sale of building or sale of land, or a third supply entry, that is supply of warehouse goods to any person before clearance for home consumption. So even this will also be, these two entries will be treated as an exempt supply for the purpose of reversal of input tax credit. Right? So this is what the amendment has been made. This is effective from 1st August 2023. So whenever you are going to recompute your reversal of input tax credit under 42 and 43, see that even you add this supply of warehouse goods to any person before clearance of home consumption. Even this entry should be added for your computations, right? Next amendment is block credit. This, I think most of us are aware of this, but still very important point here is, if any goods or services are used for the activities relating to the CSR activities, for the obligation under CSR activity, the input tax credit is restricted. It is blocked. According to my view, they wouldn't have restricted this, because on one hand, you are making a mandate to that company to oblige by the CSR obligation. On the second hand, you are restricting the input tax credit. Rather, they would have allowed this input tax credit, but anyway, as on date, from this 31st July 2023, they have brought this amendment and have stated that it is restricted. So I think with this, we can take an interpretation that at least for the prior period, it was eligible. So I think that way you can argue if they restrict anyway, right? So this is what the amendment which has been brought as a block credit. Next, revocation of registration. I think most of us would have experienced this revocation of registration, because the department has the power to cancel your registration if you have not filed your return continuously or if you have not complied with the law, the department has been given the power to cancel your registration. So in such scenario, you have been given the option to reactivate that registration. That is nothing but revoke the registration. So earlier it was 30 days, now they made, then they made it 90 days, now they have added 90 days plus 180 days. So approximately we have 270 days for applying for revocation from the date of cancellation order. The additional 180 days will be granted only with the approval of JC and AC. So I think it will be inbuilt in your system itself. So whenever you are going to calculate for the revocation, this is a welcome amendment, and I think it will really relax you from the, rather than going for appeal and going for writ and all, I think this will help you out to get a extended time for revocation of your registration. So 90 days plus 180 days is approximately we have 270 days for filing a revocation of registration. And all this amendment has been brought in rules rather than in section. Next is, I think the government is very specific now. They said we will give you the time limit to file the returns. Now, for example, today I can file for 17, 18, 18, 19, 19, 20, no time limit. But now from 20 to 23 onwards, government has come out with a time limit. If you have to file the return for that period, it cannot be furnished after 3 years. If you have to file GSTR 3B for 20 to 23, you cannot file after 3 years. So they have given a time limit to file those returns. Beyond that, you cannot file the returns. So today, if I am not complied for 18, 19, I still is able to do in the portal. That will not happen after 3 years. So I think now they brought a timeline within which you can do the compliances. Otherwise, you are nowhere in the picture. It will go into an adjudications. So based on all these TCS, annual returns, GSTR 3B, GSTR 1, they have given a maximum period of 3 years. Next, I think many of us would have applied for refund. We know that there is always a section which says that if the refund is not granted within 60 days, you have the right to ask for the interest. Yes or no? But how many of us are asking for the interest? We at least think, okay, if a refund we are getting, that is more than enough for us. But that section says that from 61st day, you have the right to claim the refund. In one of our issue, it has happened that we have applied for refund, it went beyond 90 days. Then I made a letter to the department saying that we would require the interest for the balance 30 days. Then the officer called, madam, you don't ask. If you ask this, the officer will be raised a question, how come you have not sanctioned the refund within 60 days? So it will be a question mark on the officer also. So they are very specific to say that they have to grant the refund within specified time. But they were giving their own reasons, saying that why they were not able to sanction the refund within 60 days. So to avoid the conflict between the department and the taxpayer, they brought an amendment, saying that for this 60 days, the certain time will be excluded. What is the time? The time taken to reply the notice beyond 15 days. If some information is asked by the department and if you are taking more than 15 days to give that information, that time will be excluded for calculating your interest. And because of this technical glitch, if there is a time to get your bank account validated, even that time will also be excluded while you are computing your 60 days for computing your interest. I think this is what will reduce the glitch between the department and the taxpayer. And for the calculation of interest, this time will be excluded, right? Hope I am clear? Yes? Next is, I think this is also one of the welcome amendment. Something we are aware that there is a best judgment assessment. Where the taxpayer has not filed the returns, the officer, the adjudicating officer, the proper officer will assess based on the estimation, right? Based on the available informations. So under 62, they will do the best judgment assessment and they will pass the order. Within 30 days, if you have not filed your returns, if you have not paid the taxes, it will lead into a adjudication under 73 and 74. Now that time limit of 30 days is extended further to 60 days. So earlier it was 30 days. Now they have giving you the time of 60 days to file your returns, plus additional 60 days is granted with the additional fee of 100 rupees. Are you able to get? So if you are not filed the return and if the best judgment assessment is taken by the department under section 62, earlier we had only the time of 30 days to do all your filing of returns and payment of taxes. Now 30 days has been increased to 60 days plus 60 days. So approximately we are getting 120 days for complying under 62. I think this is also a welcome amendment, but I don't know why they want to collect additional late fee also. See, anyway, late fee is there for delaying filing your returns, 100 rupees is there. They also want additional late fee of rupees 100 rupees, which is there in 62. I think we have to give suggestion that this should not be added. Already we are paying a late fee for delaying filing our returns, right? So this is what has been amended under 62 of your GST Act. Next is consent-based informations. We have something called as a consent bit. Today, the department will take your consent to share your information to other systems. For example, banking authority can ask your information, income tax can ask your information, or any other government organization can ask your information. So section itself is saying consent-based information. Your information will be shared with the other system of, for obtaining information, but your consent will be taken. If you say yes, then only information will be shared. If you don't agree, that information will not be agreed. But what information they will share? Whatever you would have uploaded at the time of registration, whatever information you are uploading during filing your returns, or whatever information you are uploading while uploading your invoices, or any other data that may prescribe. So whatever data is available with them, they have been given the power to share that with the other system only with your consent of the taxpayer. I don't know which taxpayer will give that consent, but anyway this has come as either it can be asked to a supplier or it can be asked to a recipient also, right? So, so with that the information will be shared with the other systems also. Next is Goods Transport Agency amendment. I think we all are aware from last 1 year, lot of amendments have happened in Goods Transport Agency. There are two taxes. One is forward charge, another is reverse charge. In forward charge, you have again two options. One is 12% with credit and another one is 5% without credit, that is under forward charge. And under reverse charge, we are aware it is 5%, which is liable to be paid by the recipient. When they introduced that notification, they said you have to make an intimation to the government saying that whether you are following forward charge mechanism or reverse charge mechanism. Now they have brought an amendment saying that once you are following the forward charge, you need not intimate every year to the department. Only when you are changing from forward charge to reverse charge, then only you have to intimate to the government saying that we are going to change our system from forward charge to the reverse charge. Am I clear? Right? So this intimation will be made only when there is a change from forward charge to reverse charge, otherwise intimation is not required, and that intimation should be made by way of annexure, by way of intimation. The time period is between January to March. I have seen some of the transporters who have missed this intimation and they wanted to go for reverse charge, but they have not intimated, so they missed the opportunity of reverse charge. So when the time is given by the department, we have to oblige within that time limit and intimate to the government so that for next year you can follow the scheme whichever you are preferring. But if you want to continue forward charge, you need not intimate to the government, right? So this is what has been amended by way of notification 8/2023. And when you are applying for fresh application, and if you are whatever you are following, in that case anyway intimation is not required, because that will ask you under which scheme. If you are forward charge, then there is no further requirement for you to take it up when you are applying for a fresh registration, right? Next, there is a amendment which has been taken place. I think you are aware, when there is a registration, when it is not Aadhaar authentication is happening, when there is no Aadhaar authentication, the officer has been given the right to visit your premises, access your premises, and then conclude your registration by issuing the registration number. The amendment what they have brought is, whenever the officer is coming for your physical verification, the taxable person, even without the presence of taxable person, they can still verify the premises and can conclude the registration proceedings. They need not wait for the taxable person to be physically present at the time of visit by the officer. I think this is also one of the better part because they keep on calling us and we have to go according to their things. So anyway, it is not required. Next is when you are applying for registration, very, very important is you have to update your bank details. If you are not uploading your bank details, you cannot, it can lead to a cancellation of your registration. If you go to bank, they ask you the GST number. If you go for GST, they ask you the bank number. So here they have given you the time to update your bank details within 45 days earlier, but now it is only 30 days or due date of filing of your return, whichever is earlier. So you have to update the bank details, otherwise the whole process of registration will be waste and it will lead into a cancellation of registration. So very important is bank details have to be updated, otherwise it will lead to a suspension or cancellation of registration. Next, the most amendment I think which we all are aware that even the e-way bill is required for intrastate movement of gold, precious stones, jewelleries, all is whatever is specified in 4 and 5 of annexure, all those goods the e-way bill is mandated. But even the transactions can be in relation to a supply, or it can be not for the purpose of supply, or it can be some purchase from the unregistered person, the e-way bill is required, but the e-way bill value should not be less than 2 lakhs. Otherwise, in general, what is the value for e-way bill today? In Karnataka, it is 50,000. But for gold and jewellery, they have stated as beyond 2 lakhs. We have to wait from the state government what amount they are going to notify, and accordingly, we have to comply with this e-way bill notification. I've added this one, this will be shared actually. You can read Rule 138F, which has given what are the conditions. More or less, whatever is applicable for your regular e-way bills, the same rules are applicable for this gold and precious stones. And very important is, you have to see that e-way bill is carried, otherwise it will lead into a penalty of as specified under 129 and 130 of your GST Act. But very important is, this is applicable only for intrastate movement. It is not applicable for interstate movement. So within Karnataka, this notification will be applicable, this rule will be applicable. Yes, sir. Yes, sir? Yes. No, it will not cover personal use because personal use is exempted. This will not cover personal use. It can be for job work or for other activities, for repairs. All that will be covered in activities. So basically job work will be covered other than supply. Personal use not required. Anyway, that is exempted in notification itself. The recipient is not required. The supplier, when he is supplying, he has to issue. Whether it can be a B2B or B2C, the vendor has to issue it. But when I am going to the shop and buying that gold and coming to home, then it is not required. If you are in a, can you give the mic, sir? Yeah, little louder. No, then it is not required because the movement should happen for the business. So it is not in the course of business. That is your personal baggage, personal jewellery, not required. Yes, next is, I think we all are aware that supply to SEZ, we were treating it as a zero rated supply. But now they have made an amendment. This would have happened 3 years back, but anyway, this has got notified now, saying that it will supply to SEZ for authorized operation only will be treated as zero rated supply. If the supply of goods are not happening for authorized operation, then it is not at all a zero rated supply. I think this is what an amendment which has been brought. Though this authorized operation was there in the rule, if anybody of you can see the rule for refund, they have already used authorized operation there. But in section they have not added, so now they have made it mandatory that if you have not used for authorized operation, it is not deemed as zero rated supply. So how we used to follow in service tax, same thing I think we have to follow in GST also, and have to get an endorsement from the SEZ saying that it is used for authorized operation. Next is e-commerce operators. As we all know, in section 24, if any person is supplying the goods through e-commerce operator, he was mandated to take a registration, right? He was mandated to take a registration under 24 irrespective of his threshold limit. Now to encourage this MSME, now to encourage the small entrepreneurs, they have brought an exemption saying that even if such taxable person is supplying the goods through e-commerce operator, they need not take a registration under 24. If, for example, if I am a supplier through e-commerce operator, my turnover is 15 lakhs, I need not go for registration under GST law. The whole responsibility is given to a e-commerce operator and not to the supplier, right? But what is the condition? For example, I am a supplier, I want to supply through e-commerce operator, but my turnover is only 10 lakhs, so I have not taken GST registration. So in that case, the e-commerce operator is very much responsible for that, and he should see that his enrollment number is there. He should not allow him to do any interstate supply. You should see that no TCS is collected from such unregistered supplier. If he is not following all these conditions, then e-commerce operator will be liable for penalty of 10,000 or to the extent of tax involved in that supply, whichever is higher. So the whole responsibility is given to a e-commerce operator. So whenever he is going to have a contract with this unregistered supplier, he has to be very careful. He has to see what kind of supplier he is and whether he is fulfilling all the conditions which are required in the notifications. That is 36, 34, 37 of 2023. Right? Hope I am clear on this aspect. So he has to analyze the vendor wise, registered, unregistered. For unregistered, he has to come out with the additional conditions that whether these all conditions are fulfilled or not fulfilled. If not, then there is a penalty under section 122 1B. This is also newly inserted, and based on that, they are liable for penalties. So I think whoever is handling the e-commerce operator, please look into this amendment and accordingly comply from the current year. Next. Refund for casual taxable person, non-resident taxable person. As we all are aware, CTP, I think we call it as CTP, that is a casual taxable person, who has been given the right to take a temporary registration for 90 days, and with the permission, they can take another 90 days. So maximum 180 days registration can be given to a CTP. Now, whenever you are applying for the registration for CTP, you have to deposit some amount to the government. If you are not paying any security deposit to the government, you cannot apply for the CTP registration, right? So whenever you deposit based on your estimation, if at the end of that period, if there is an excess payment of taxes, you can apply for refund before the government. But while application for the refund, you have to file your final returns. Very important is whenever you are applying for this refund as a casual taxable person or non-resident taxable person, you have to file your final returns. And whenever you are going to take a refund from the government, please don't forget to ask with the interest. Because section itself is saying you can ask for interest. Because the rule has been amended to provide for refund on account of excess payment of interest or any other amount along with the refund. Many times we miss this interest of 6 months. So this is one more amendment specifically they brought in the rule. So you can re-look into that and you can apply for refund along with the interest under the GST law. Hope I am clear. Next, wait for this. Sooner or later we all are going to get this. What is this? 1D, recovery notice. This is a notice which will come if you are not replying for DRC 1B. What is DRC 1B? Whenever there is a difference between GSTR 1 and GSTR 3B. In earlier years, we have taken that experience only filing one and continued for 1 year. That will not happen now. Every month, your GSTR 1 and GSTR 3B verified together. If there is a difference between GSTR 1 and 3B in outward supply, you will receive a notice in DRC 1B, and notice for recovery will happen in DRC 1D. Directly recovery, no adjudication. At least for 1C, what was happening? Between 2B and 3B, it was leading into a further adjudication. Whereas, when there is a difference between 1 and 3B, it will directly lead into a recovery under 79. So I think we have to be every month. I think this audit, what annual return I am talking, I think every month you have to do. Otherwise, we are expecting all this 1B, 1C, 1D, so you have to comply with this every month wise, and you have to see that there is not much no difference between 1 and 3B. If there is a difference, please be ready with the reasons so that immediately you can reply and avoid recoveries, right? Next, one more important point I would like to bring out for recovery is, I think most of you are aware that Commissioner Appeal has already passed the orders. And few of the taxpayers are already receiving a notice for recovery. Already attachments are made. Why attachments are made? Because pre-deposit of additional 20% or the final amount is not made to the government. So what is happening today is lot of state officers especially are attaching wherever there is a order passed against you by the Commissioner Appeal order. So because still, as you all know, Karnataka Appellate Tribunal is not yet constituted. We don't know where to file appeal, we don't know where to make a pre-deposit. So though there is a Punjab and Haryana High Court case on that, but to make a payment through DRC3, but we have made a request to the government saying that please come out with a procedure. Please come out with the instruction saying that how to make a payment of 20% while you are going to file before the Karnataka Appellate Tribunal, so that we can make a payment. Because today if you are making through DRC3, tomorrow while filing the appeal you say no, you have to make additional pre-deposit that will lead to additional working capital. So we are waiting for the further instruction. But centrals, I think only a few officers are doing recovery, but state officers have already started doing the recovery against the orders which are passed by the Commissioner Appeal. So please reply to them saying that we want a procedure for making a payment, and wherever possible, please make a payment of 20% to avoid a further recovery, and please write a letter to them that we are planning to go for filing an appeal before the Karnataka Appellate Tribunal, and still it is not constituted, so the payments are not yet made. So that is what we can try to litigate, right? But to avoid litigation, it is advisable to pay 20% and keep it as that DRC challenge till you file the appeal. Next, this also has created a little havoc among the real estate and other things. I think there were a lot of this issue is there in service tax law also. This issue has come in GST also. Various advance rulings are there, favorable advance rulings are also there, and adverse advance rulings are also there. So I think they brought a clarity on this reimbursement of electricity charges received by real estate companies, malls, airport operators from their lessor occupants. There are certain intricacies in this circular, but let me touch upon what circular is trying to convey to us. Basically, as you all are aware today, whenever you are renting a property, right? Your property, you are going to collect a rent. The rent can include the component of your electricity charges, water charges, whatever it is. If your rent is having a character of all this including component, then it will lead into a composite supply, and accordingly you are liable to pay the GST. Whatever the principal supply of rent, tax rate you are paying on rent, the same rate will be applicable to your other charges also. But as a real estate owner or as a RWA, if you are collecting the electricity charges from each of the resident, and sub-meters are installed in each of the resident house, and if you are collecting that electricity charges based on actual basis and giving to the BESCOM on actual basis, then you can take an exemption based as a pure agent. All the conditions of pure agents are not fulfilled. That's why they have used the word as deemed to be acting as a pure agent. Are you able to understand? They are only deemed pure agents. All this RWA, all this real estate, wherever they are collecting the electricity charges and paying to the BESCOM. But most important point is it should be on actual basis. If you are collecting with profit, say for example 500 I collect, 400 I pay, or 450 I pay, or 490 also I pay, I end up paying GST on the whole 500 rupees, right? So only if it is on actual basis, based on meter reading, whatever is you are collecting and paying to the government, you will get an exemption. Otherwise, it will end up paying the GST at 18%, right? Many of I have seen that they have approached, and this was issue created by multiple advance rulings and authorities. I think it will bring at least to some extent clarity to understand where we can pay the taxes and where we are not required to pay the GST on such. Otherwise, I am not a supplier of electricity. And as you all know, electricity is not liable for GST. This is only facilitating the supply, facilitating for the payment of your electricity charges, which has been consumed by the resident, but which is paid by the owner. Yes, I think this is also one. That's why I said this circular has a lot of intricacies, saying that when you are not at all a supplier, when you cannot, as per the even that Karnataka Electricity Board Act also, you cannot be a trader of electricity, right? You are regulated by a Karnataka Electricity Board. But this circular is saying that it is a facilitator. They are taking it as a service where you are just collecting the charges and depositing to the government on behalf of the resident. So based on that, you are treating it as a facilitator services and liable for GST. So that's why they have given an exemption. Wherever you are collecting on actual basis and giving to the board, then it is not required for GST. And even if you see the exemption notification in 12 or 17, they have stated supply of electricity only by transmission utility. They have not said by a taxable person. So that exemption is given only to a specific entities and not all the entities, right? So I think this is what is contradicting with that exemption and the circular. But this circular for specific purpose, we can use it, and wherever beneficial, I think we can save the taxes to the extent of pure agent, right? See, this circular is only for electricity. So we can try to apply the for water if it is on actual basis applying Rule 33 conditions of pure agents. The next, anything is? Yes, sir? What is the? Water, yes. See, if it is water, basically it is liable for GST. No? There are certain pure water and all is liable for GST. So such water, otherwise as such basic it's exempted. Only for that aerated water and other water it is liable for GST. The next is taxability of personal guarantee and corporate. I think many of us would have received the notices also for saying that there is a liability of personal guarantee. We also received few notices saying that there is a personal guarantee and there is a levy of GST. I think this circular will help all of us to save from those taxes, because in the case of personal guarantee, where we are aware that the directors give the personal guarantee on behalf of the company, and the directors are not going to receive any consideration based on that RBI circular also restrict them, the company, to give any consideration to the director for the personal guarantee. So accordingly, the circular clarifies that as there is no consideration which is moving from company to a director, so accordingly there will be no GST implication on that personal guarantee. So this is what is clarified. I think all the amendments, all the clarifications are coming only through circular. So this has been clarified by way of circular. Wherever notices are received, I think we can apply this and take the benefit of this. Now next is taxability of corporate guarantee. I think few of the entities would have already received the notices. We have seen in audit observation, in show cause notice. And in one case it has happened that order was passed and then we received a circular. So we cannot apply for rectification also, right? Because rectification will apply only when there is a mistake apparent on record. So unnecessary, we end up paying a 10% as a pre-deposit and file the appeal. So all this has happened. But anyway, this has created a more clarity as such to some extent. But there are still intricacies on this. Basically what it is saying that whenever the corporate guarantee is given by a company to a bank on behalf of the another company, where both the companies are related parties, then it is treated as a supply between the parties and liable for GST. And they have come out by inserting a new rule, that is 28(2), saying that on what value the GST should be levied. It says that notwithstanding anything contained in sub-rule, the value of supply of services by a supplier to a recipient who is a related person by way of providing corporate guarantee to any banking company or financial institution shall be deemed to be 1% of the amount of guarantee. So they have come out with a valuation mechanism on what value, how much tax should be paid, or the actual consideration whichever is higher. Now the issue with this circular is whether it is retrospective or prospective. We want to understand whether it is retrospective, prospective. It is not clarified. There are different school of thoughts. One school of thought says it is retrospective because it is only a clarification. It means it was applicable. The second school of thought says as there was no valuation mechanism which was specified prior to this circular or prior to this amendment, when the valuation mechanism was absent, we were not aware on what value we are going to pay the GST. And you know, a very famous decision is there, Govind Gangaram case where they say that there are certain component which should be there to levy the GST, and one among them is value should be prescribed. When there was no value, then how can you levy the GST? So the value has been identified from this date, so based on that it should be prospective. So there are different school of thoughts. You can argue or you can litigate, or you want to pay. And the second intricacies in this circular is whether this has to be calculated monthly, or this has to be calculated one time, or this has to be calculated on continuous basis. There's no clarity on that, because it is saying 1% of the amount. Say for example, the life of guarantee is 5 years. So is it 1 by 60, 2 by 60, 3 by 60 we are going to follow, or 60 by 60? Are you able to get? So I think these are the certain more clarifications we are expecting on this circular. It has to come out to avoid further intricacies. But anyway, it has brought to some extent the clarity as you have to pay the GST on the corporate guarantee value, right? So this is one more amendment which has come through a circular 204/16/2023 and 52/2023. Next. Hope I am not very fast. Fine, right. Next is clarifications relating to export of services. I think you all know there are certain conditions for the export of services. The supplier should be located in India. The recipient should be located outside India. The place of supply should be outside India. The consideration should be received in convertible foreign exchange. But in certain scenarios, you will be receiving in Indian rupees through special Vostro account and Nostro account. So in that case, the department were rejecting your export, saying refund they were rejecting, saying that you are not receiving in foreign currency and you are receiving in Indian currency, though it is mandated by RBI. We already received saying that it is not eligible, and they rejected the refund. So they brought a clarification saying that even if it is received in Indian rupee, it is still treated as you have fulfilled all the conditions of exports and is eligible for refund. So wherever department is rejecting your refund because of non-receipt in Indian rupee, please apply this, please submit this with circular. They will consider it, and accordingly they will allow your refund. Next. Director services to the companies. I think this is also was creating a conflict when they brought this, as you all know, the services received from directors, it is liable under reverse charge, right? Now the issue is, what kind of services are covered? If the services are provided in professional capacity, then the circular says the company is liable under reverse charge. But if the services are provided in a personal capacity, then there is no reverse charge to the company, right? So this is what they brought a clarification, because some of the departments said, no, you have given this property on rent to the company, the reverse charge should come. All that things have happened. So you have to identify the services by the director and try to see which is the personal capacity and which are there in the professional capacity. So to the extent of personal capacity, you are exempted from reverse charge. To the extent of professional capacity, you are liable under reverse charge, right? So I think this is one of the amendment which is circular, which is issued by under the GST law. Next. This, I don't know, this clarification has come, but they're just trying to make a more specific, rather, otherwise we are very clear with the principle. They are trying to say that whenever we go for watching a movie, they generally see that there is a supply of food or beverages in a cinema hall. Whether that can be treated as a restaurant service or whether it will be treated as a cinema exhibition services. So basically they have clarified that whenever the ticket is sold along with the supply of food, then it is a cinematography services. But if the food is supplied independently of your cinematography services, then it is not, it will be treated independently and treated as a restaurant services, right? Hope I'm clear. Next. Refund is linked with the GST 2B. I will not go much with this because we are very clear. Earlier it was linked with 2A, now it is linked with 2B. The format of letter of undertaking, now whenever you are going to apply for the refund from now onwards, please apply this revised format. Don't follow your old format. Whatever is given in this new format, they have changed certain wordings in this format. So please apply this format which is given in circular 197/9/2023. It is very important circular. Don't forget to read the circular before applying for refund. They have given certain format, how your letter of undertaking should be, and how your other application should be. So I think this will help you out to apply for the refunds, right? So this is what I think we can look into here. And the next is this activity of holding shares by a holding company to a subsidiary company. Even the notices were issued for this purpose also. Whenever there was a holding of shares by the holding company, then the government said there is a levy of GST because there is a service, and there is also an entry which is there in the what I can say, it is there as a SSC code, and based on that HSN entry, they said there should be a levy of GST. So this circular is very helpful. It has been very clarified that securities cannot be goods or services. So accordingly, the securities held by the holding company in the subsidiary companies are neither goods nor services. Accordingly, there is no GST implications, right? So I think even if you have received a notice for this issue, you can refer the circular and accordingly you can accept the taxes. Next is warranty charges. I think this was basically there from the GST VAT law also, and similarly they brought in GST law also. Many times the contracts are entered along with the warranty charges. So the government has very clearly brought out a clarifications with lot of scenarios where it is leviable and where it is not leviable. So whenever the warranty is given along with the sale of product, there is no requirement to pay the GST again on the warranty charges, because already the warranty charges are included in the sale price of the goods, right? So accordingly, if there is no additional consideration you are receiving from the customer, then there is no GST implications. But if you are receiving any extended warranty, and if you are receiving additional consideration from the customer, then there is a levy of GST. And if the distributor has provided these services, warranty services on behalf of manufacturer, then he can get it reimbursed from the manufacturer, and accordingly there will be not any GST implication. If on the distributor, it will be on manufacturer. So depending upon the contract between the manufacturer and distributor, there will be a levy of GST. And if the distributor is doing some repair services or some additional services for which he is charging during the warranty period, even that amount will be leviable to GST. So I think this warranty circular, if you read, you will get lot of scenarios which has given us to understand where there is a levy of tax and where there is no levy of taxes. Next is clarification on TCS liability under 52. I request the members to go through this. This is a general model of e-commerce where there is a buyer e-commerce also and there is a seller e-commerce operator also. So you have a supplier, you have a buyer e-commerce operator, you have a seller e-commerce operator, and you have a finally the buyer. So there was no clarity who should deduct the TCS. So ultimately they have clarified by way of circular that whenever there are multiple e-commerce operators are involved in a single transaction of supply of goods or services, or both through e-commerce platform, and where the supplier side e-commerce is not the supplier in the said supply who is liable for compliances, then in that scenario, the government has clarified that the person who is making the payment to the supplier, that is nothing but the last supplier e-commerce operator, will be liable for TCS. So that is what they have clarified here, who finally release the payment to the supplier for a particular supplier. And the second scenario is where the supplier e-commerce operator as well as the supplier is the same person, then ultimately the next will be your buyer supplier. That buyer e-commerce operator will be liable for TCS. So I think this is what is trying to bring out the responsibility on the respective person when there is a multiple channel of your e-commerce operator between the seller e-commerce operator and the buyer e-commerce operator. So always remember, the last person will be the person who will be liable for TCS. So if you bring that sequence, it will be easy for you to understand who will be the person. Ultimately, the person who is making a payment to the supplier will be liable for TCS. So in this case, as the both are same, so they have shifted this TCS responsibility to the buyer e-commerce operators. I think morning they would have discussed on this circular, am I right? Because morning I think there was a department proceedings between 2A and 3B. So I think he would have discussed on circular 183 and circular 193, right? Hope he has discussed. If he has not discussed, please remember, whenever the departments are issuing the notices to you for between 2A and 3B, for 17-18, 18-19, you can apply the circular 183/2023. And whenever the notice is issued for 1920, you can apply this circular 193 bar to 5 bar 23, where they have specified certain conditions. If you fulfill the conditions, if it is not there in your 2B or 2A, but you are able to produce other documents, including the certificate from a chartered accountant, including the payment details to your supplier, including your invoice details, and other substantial documents to prove that it is an eligible credit, I think with this circular, you can take the benefit of that credit, and accordingly, as you all are aware, the department is allowing you the credit based on this additional documents. So even this circular 183 and 193 circulars are very important whenever you are going for adjudication proceedings between 2A and 3B, right? Especially on the issue between 2A and 3B. So you can refer this. Because this percentage has come because we had a concept of provisional credit for those respective years. So 20%, 10%, 5% provisional credit was there. So accordingly, they have brought out this percentage in this circular. The last circular is on interest computation. Very important is 50 per subsection 3 says, if you have availed the input tax credit, please remember, if you have availed the input tax credit and not utilized that input tax credit, you are not liable for interest. Clear? The second aspect is, if you have availed the input tax credit and utilized the input tax credit, then you are liable for interest under 50 bar 3, 50 subsection 3 of your GST Act. Now the third important is, if you have wrongly availed IGST credit, because we have 3 types of credit. What is that? CGST credit, SGST credit, and IGST credit. Now the important part is, if you have wrong availment of your IGST credit, then what balance you have to see in your electronic credit ledger? You have to see the balance of your IGST credit, CGST credit, and SGST credit. Are you able to get? Whenever you are going to compute the interest for wrong availment of IGST credit, you have to see the balance of SGST balance, CGST balance, and IGST balance. Now next example, if you have taken wrong availment of CGST, if you have taken wrong availment of CGST, then what balance you will see? What balance? Very important, see, interest computation is, otherwise you end up paying huge interest. What balance you have to see in your electronic credit ledger? If you have wrongly availed CGST, you have to see IGST balance and CGST balance. And if you have wrongly availed SGST credit, then IGST and SGST balance. You got the point? So, very important is, whenever you are going to compute the interest, please refer circular 192, which will define, which will give you the way how to compute the interest. And next very important point is, whether I can use the compensation cess. Whenever I am going to, I have a huge balance in my compensation cess. Can I say that I have a balance in this, so I will not pay interest? No. Because compensation cess can be adjusted only against the compensation cess only. So even though you have a balance of compensation cess, you will end up paying GST, interest on IGST or CGST or SGST if there is no balance in your electronic credit ledger. Right? So you have to understand, because SGST cannot be adjusted with CGST and CGST cannot be adjusted with SGST. So all this mechanism you have to understand how section 49 works, and accordingly your interest will be computed under 50 subsection 3 under the GST Act. Right? So I think with the time, I think with this 45 minutes, I have taken this as a 1 hour session because we have to discuss little more on this GSTR 9 and 9C, and I thought like let me look into this. And there are so many other amendments are also going on which are in process. Lot of decisions have come. I think you are aware this 16(4) issue is going around for the time limit to avail the credit. Many of the notices are issued today saying that you are availing the credit beyond the time limit, so accordingly it is reversed. There is no such, as on date, no such favorable decisions, or there is lot of interpretations which is going on. So I think we have to litigate and wait and see how it is going to be read, because the law is very clear that within the statutory time which is prescribed under the law, beyond that there cannot be any eligibility of credit. But anyway, we have to wait and see. That is a one more 16(4) is going. And next very important, I think the common issues which is revolving around is wrong availment of your input tax credit because of wrong classifications. Instead of IGST, you have taken it as a CGST, SGST, or instead of CGST, SGST, you have taken as a IGST, there also there is a lot of litigations which are going around, because there is a clarity on outward part, because section 77 is saying that if you have made a wrong payment of IGST, you can still make a correct payment of taxes and claim the refund of wrong payment of taxes, whereas such clarity is not there for the inward supplies, but such clarities are there for the outward supplies, right? So I think there are certain intricacies, as this is an evolving law, but we have to thank that so many circulars are giving a clarifications, and it really reduces a lot of other interpretations, and it brings out more clarity to understand how the section has to be read and interpreted. So I think I was able to pick some 30 amendments from the last 3-4 months amendment. If anybody has any issue, I will take it up, otherwise I'll go to GSTR 9 and 9C, because that require little time to look into that detail and try to see how we can connect with our live cases which we are already filing today in our offices, right? Anybody has any issues with the amendments what I've discussed from last 30, or any other issues if you have, please I'll just keep it open, otherwise I'll proceed for GSTR 9 and 9C. Yes, sir. Is there any? Late fee is there. Late fee is there for delaying filing your returns. GSTR 1 it is not there na, as on date, because automatically it will calculate, as on date it is not calculated. No, that's what I'm saying, that earlier period the system is allowing, but because of this amendment, after 3 years it will not allow, because they are going to block filing of your returns. Now at least your system is allowing you to file. With late fee, without late fee is a different part, but at least it is allowing you. But because of this amendment, after 3 years they will not allow you to file even with late fee also. So that is one aspect. Yes. Any other queries? Any other department issues which you are having, or all are in the pressure of 9 and 9C? Yes, any other query on GST? Yes, sir.
Refund of ITC in case of export of service.
Refund of?
Input tax credit. In case of export of service, STPA's registration is mandatory to claim refund of ITC in case of export of service. STPA, Software Technology Park.
That is a
that
deemed export.
registration is mandatory.
Yes, yes, it is mandatory, na? It is mandatory. It is given in that 47/2017 notification.
Okay.
They have covered Software Technology Park. You can read that notification.
Okay, thank you.
Yes. The sir issue is, if the order is post to 31st March, can we still apply for amnesty scheme? Make an attempt. Nothing, because there is a favorable decision which has come that benefits should be given. Nothing wrong in trying that. You can still make an attempt actually. Yes. So anything else? Shall I proceed on 9 and 9C? Tell yes or no at least. Yes. I think I'll be dealing more on practical cases actually for this GSTR 990. I think most of you are well versed from last 4-5 years, or some might be filing first time, few of them, but I'll try to see wherever practical issues we are able to understand. Before going into this, I advise, or I felt that this would have got amended. When our 3B itself is amended, even our 9 and 9C also would have got amended in alliance with our GSTR 3B. Because of that, there are a lot of multiple interpretations we are having for disclosure in our 9 and 9C. But anyway, we will try to see what best we can and how we can disclose within the purview of law, right? So first very important is, who can file these returns? As we all know, it can be filed by the regular taxpayers, it can be filed by the composition taxpayers, e-commerce operator, and it should be filed where it is 5 crores. This we are clear. Who is not supposed to file this returns? I think ISD, that is input service distributor, then person paying taxes under 51, that is government authorities, e-commerce operators, that we are very clear, casual taxable person and non-resident taxable person. So these are the persons who are excluded from filing your GSTR 9 and 9C. Yes. Now, most important is how this annual return is structured is, it is divided into a different segments. There is a different tables which has been given in GSTR 9. The very first table is asking you, please give your basic details. Most of us, we don't look into that table, right? We have to look into this table because if there is some amendment which has happened, whether it is populated or not, because more or less I have seen 9 is auto-populating. And I have seen in few of the entities, they will not verify also with the books of accounts, just submit. When the department will come issue notice, we'll see at that point of time, they are just filing. It should not happen. This is only the last chance for you to report the details, correct details, and as per your books of accounts. So you have to take it because this is like your self-assessment, where you are self-assessing your details which are disclosed in your books of accounts, or correct your details, I can say. So first part is, it is asking your basic details. Then second part is, it is asking you to give your please outward details and inward details, whatever it has happened during that financial year. The third part is asking you to give the details of your ITC, whatever you have availed. And the fourth part is asking you to give the details of tax paid as declared in return filed during the financial year. We'll deal in that details. And part 5 is, if you have made any amendment from April to October, sorry, it is not September, it is October, you have to give that information, and all other information, whatever demands, refund you would have received, all these are the informations which is a structure of your annual return. Now, basically, very one important point I would like to bring to the members is, before filing GSTR 9, please read your 3B, especially for 22-23. Why? Because April, May, June, your format was old format. Yes, your 3B format was old format. From July 22 to March 22, it is a new format. So, instructions also has to be, we'll read, but first we'll understand how 3B was structured earlier and how it is changed now. Because this will help you out how to disclose in your GSTR 9 and 9C. The first very important is 4A remains the same because it is import of goods. 4A2 remains the same because it is talking on import of services. 4A3 is talking on inward supplies where you are liable for reverse charge. 4 is inward supplies from input service distributor, that is same. Now the most important issue is 4A5, that is all other ITC. Here also we have all other ITC. Now let us see, what was 4B1 and 4B2 today is permanent reversal and temporary reversal. What is 4B1 today? Permanent reversal. If you have put your reversal by mistake also in your 4B1, you cannot reclaim it. So you have to be very careful when you are filing your returns, especially we have to tell our staff also that any reversal, unless it is not a permanent reversal, please don't add it in 4B1. Wherever you have doubt, wherever it is reclaimable, please add it in 4B2. So 4B1 is permanent reversal where you cannot reclaim it, and 4B2 is a temporary reversal. This one point we have to remember. Now, next is 4D1 is talking on other details, that is, which you have temporarily reversed it, you can reclaim it in 4D1. Are you able to? Because please remember this, it will help us out when we are going to discuss on our annual return. So, first credit will come in 4A5, right? Out of that, I reverse it in temporary reversal, or I take it as at 4B2, it's a temporary reversal, and again I can reclaim it in 4D1. A very simple example. I have taken the input tax credit. I have not made payment to my vendor, right? Within 180 days, I have not made payment to vendors. What I will do? I will reverse in 4B2 as a temporary reversal. Once I make a payment to my vendor, what I will do? I will take it in 4D1 as reclaimable. You are able to get this point? So 4A5, 4B2 and 4D1. So please avail, reverse, reclaim, right? So this is what the new structure of your 3B. Now when you are going to file your GSTR 9, you have to consolidate informations as per the tables in old 3B as well as in from your new 3B also. Now first important, I am just saying, we just don't look into these factors. The first table is asking you, please give us the details of advances, inward, outward, whatever it is. Don't go with the headings. Try to see what is there in that segment. It is asking you, supplies made to an unregistered person. How to disclose this? What we do? We just enter B2C details. Here, the instruction is that you have to disclose net of credit note and debit note. Whenever you are disclosing B2C, please remember that you have to give your details net of your credit note and debit notes. Don't give gross figures here. It will be your wrong reporting then. You have to give net of your details of credit note and debit note, and it will be B2C. Your customer should not have any GST. And even if you are supplying through e-commerce operator, please remember, where your e-commerce operator is not registered, even those transactions also will come in this category. So even if you're supplying through e-commerce operator, even that entry will be taken here, right? And whenever you're going to file this return, please relook into the informations what you have furnished in 5, 7, 9 and 10 of your GSTR1. Auto-populate, it is auto-populating. Whatever data you have pulled in your GSTR1, it is auto-populating. But important is, you should know how to disclose it. So whenever you are going to reconcile with your books of accounts, especially these real estates, because they are having a transaction of B2C, so it should commit as a net of credit note and not as a gross and credit note, right? So this point I just would like to bring out to the members. Next, when it is a B2B transaction, you cannot do net of here. You have to show the gross value, because credit note has to be or debit note has to be shown separately in the case of B2B transactions, right? This is the second point. And even if you're supplying through e-commerce operator, where your e-commerce operator is registered, you have to disclose those informations. And from GSTR1, you have to pick this information from 4A and 4B. But don't include the supplies where your recipient is liable to pay the GST, even though he might be a registered person. But you should not include that amount in this B2B transaction. So you are clear? All these deemed exports also will come in this transaction. Whatever the deemed exports you are making it, supplies to EOU, all that will come in these transactions, B2B transactions. Am I clear? Merchant exports, deemed exports we have, merchant exports will come in your B2B transactions. So am I clear? So it should be shown as a gross, show all your merchant exports, show all your supplies through your e-commerce operator, and don't include the supplies where your recipient is liable to pay the GST. This is what the instruction you have to understand and you have to incorporate here. Please see that whenever it is auto-populated, kindly recheck with your books of accounts, because here it is auto-populated based on what? It is auto-populated based on your GSTR1. So you have to correct yourself by addressing the information from your books of accounts. If your books of account is showing 5 crore and if your GSTR1 is showing 4 crore, which amount you are going to add here? Which amount? Is it 4 crore or 5 crore? This is what the confusion I want to clear it. Is it 4 crore or 5 crore? How many of you say 4 crore? And 5 crore? It should be 5 crore. Audited books only. You have to show your book as per your books of accounts. Please show table 4. Please do the reconciliations between GSTR 3B, GSTR 1 and books of accounts. Ultimately, you have to show whichever is correct. Right? So please show as per your books which is correct figure. I will tell you how it will imply applicable to other tables. That is fine. But one instruction, please keep it in mind. Whichever is a correct figure should come in table 4 with taxes. If I was showing 4 crore and I was paying only 50 lakhs, now because of 5 crore my liability will become 75 lakhs, for example. How to make that payment 25 lakhs? Whether it should be shown or we can be silent. All these issues are there, but your filing will be wrong if you don't disclose your returns as per your books of accounts, right? So whatever is there, you have to do the reconciliations between 1, 3B and books. There is a possibility. You would have disclosed 5 crore, but your books would have shown. Vice versa is also possible, yes or no? At that point of time, what you will show? 5 crore you have already shown in your GSTR1, whereas your books is showing only 4.5 crores. Which one you will disclose? 4.5 crores. Yes? So this is what I think we have to take care, look into this aspect, because I've seen few of the annual returns, they are filing as per 1. All corrections they are doing in 9C. No. For outward supply, please incorporate the figures as per your books of accounts, right? Next. Zero rated supply on payment. Yes, sir. In GSTR 1 you are asking, there is a column na? In B2B only you can ask, you can enter, na? Where your recipient is liable to pay GST. No, I think they have added that new column, na? They have added specifically for that. It is not activated. Oh, B2C only you can enter, na? I agree that, but you can still show it as B2C only, na? I got it. No, what I'm saying is, wherever the restaurants are liable to pay under reverse charge, wherever these e-commerce operators were made payment, then it will become as an exempt supply. It will be shown in table 5 of your 9, not in table 4 then. In GSTR 1, it will remain as an exempt supply only. Huh? Yeah, table 5 of GSTR 9 is exempt. How you are disclosing now? As of now, how you are disclosing? Huh? Okay. Okay. I think last year only this has been incorporated. Na? This circular has come. I think they have not amended as per that circular in that. Okay. I remember in 3B, I remember specifically they have added that column in 3B, but they have not amended GSTR 1 accordingly. I think you can make that correction in your GSTR 9. Na? You can make that correction in your GSTR 9. If huh. Okay. Okay. Definitely we'll take this issue, because we were thinking that it was reconciling with your 3B, but if this technical issue, I think we can put it this through GRC cell actually. We'll consider, yes. Yes, sir. Yes. Unbilled revenue, I will come to that. There is still GSTR 9C is there. I will come to that, sir. Your question is on unbilled revenue, I'll come. I'll just tell the scenarios also. Just, if it is for this table, you just tell me, sir. Yes, sir, tell me. I'll come to that, sir. I'll come. ITC still it is there. Let us go table wise. If you have any issues in this table, you let me know. Then I'll come to that 4D1 also. Shall I proceed? Anything on B2B, you let me know. I'll come to that 4D1 also, sir. So this is what I think. Sir, your issue we will reconsider, because we were believing that it was reconciling with this, but I think this can be, because 3B they have amended, but 1 I think they have to recorrect it, I think. What is that? Yes, that you can put it as a reason also. For the reason of difference in 9 or 9C, you can add it as a reason. 9C is giving you the column also for reasons, you can add it up. The next is zero rated supply on payment of taxes. I think this is with payment of taxes. Recently, they have made an amendment also. The few notified goods are excluded from this, like tobacco and all. Otherwise, a lot of goods are covered under this. So accordingly, you have to give the what is the value of that zero rated with payment of supplies with taxes. And for SEZ also, you have to bifurcate on payment of taxes. And please see that don't merge credit note and debit note for this transaction also. Show it separately. For zero rated supply credit note, debit note, or for supply to SEZ also, please show it separately. Next is deemed export. I have seen in some of the GSTR 9, they are adding merchant exports also. Don't get confused with deemed export and merchant exports, right? Deemed export is notified by way of notification 47/2017. Only those transactions will come into 47, this deemed export. Whatever merchant export, already I have told you, it will come in the B2B transactions, right? 47 and 48. And It is immaterial whether all that conditions you need not look. This is only for the disclosure purpose. Next, very important is advances on which you have paid the taxes, but you have not issued the invoice for that year. Please remember, I'm not asking for the next year. I'm saying you have advances on which you have paid the taxes, but you have not issued the invoices in that respective financial year. Then you have to disclose that advances on which you have paid the taxes. Am I clear? Yes, on which invoices have not issued. And next is inward supplies. Next column is 4G, very important. Inward supplies on which tax is to be paid on reverse charge basis. So you have to include all your inward supplies, whatever is the value and whatever you have paid the taxes on those reverse charge. It is a consolidated amount, right? You have to bifurcate your CGST, SGST or IGST as the case may be, right? And all this will be net of credit note or debit note. Anyway, we cannot issue credit note against the advances. Am I right? You cannot issue credit note against the advances. You can issue credit note only against the tax invoices, right? And these inward supplies also include import of services also. All this reverse charge, what I am specifying here, it also includes import of services on which you are liable to pay RCM taxes, right? So this is what is given. Next is credit note, very important, because lot of notices we are seeing that today, they are issuing by way of saying that this is not matching with your books of accounts. So please see that you bifurcate between financial credit note and GST credit note. Whenever you are going to disclose the credit note in GSTR 9, don't add both financial credit note and GST credit note. Here which credit note should come in this column? It should be only GST credit note which has to be inserted. And very important is all these additions, amendments, if you want, you can do it in the next column, but not in this. Here, specifically, you have to add the details of debit note and credit notes only, specifically, which is pertaining to this transaction. Any amendments are there, that has to come in table 4K and 4L. So totally, you will get all these transactions. I am just giving a background of the table so that whenever we are going to discuss these issues, it will help us out to link with those practical cases with the respective tables. So hope I am clear with the table 4. We are clear? We are having B2C. Yes, sir. No. It is only services. Import of services. It's not import of goods. It's only import of services, where you are liable to pay under reverse charge. Because we have a... Yes, sir. Who is talking? I'm not able. Yes, sir.
And 23, 24, there is the advances as well as 21, 22 adjustment as well. Now the table is coming as a negative balances.
It's possible, no problem.
No, I'm just asking.
Yeah. It can come negative also because there is some unadjusted advances.
The 21, 22 unadjusted usually in 22.
Yes, last year advances will get net off with this current year. So no issues. Even we are having certain annual returns where it is showing at annual negative balance. No issues with that. If, as long as it is reconciling with your books, no issues.
Yeah, it's okay.
Yes, sir.
A similar question where adjusting the advance, it was clerically, there was an error saying that when one number was additionally reversed. So it can be adjusted in GSTR 9, right?
Yes. You can
to match with the books.
Yes. You can do it.
Okay, one number got extra, like
No
instead of 3,20,000, it got 32 lakhs.
Please correct it in your returns.
Okay.
Yes. Table 4 is very important, right? So I think this is what you have to give. Tea break. We'll have tea break? Or we'll continue? Yeah, we'll have tea break for 10 minutes and then we'll discuss on the important aspects. Yeah, 10-15 minutes break. Yeah, I think we have discussed on table 4 and then we had a break. So the next table is table 4, as we understood that it is for a taxable supplies. Now we have the table 5 which is talking on the supplies which are not leviable to GST. So basically it includes exempt supply, non-taxable supply, no supply, and where the exports are made without payment of taxes and supply to SEZ without payment of taxes. So all these are added in this table 5. One more very important aspect I think we have to remember is there is one entry called as supplies on which tax is paid by the recipient on reverse charge basis. So possibly like for example if you are a GTA and you have asked your recipient to pay under the reverse charge, so in that scenario you have to add that entry in 5C where your recipient is liable to pay under GST even though it is a taxable supply for you. So these are the entries which has been given in table 5, and the problem here is the lot of issues today the department is doing is based on this they are recomputing your reversal of input tax credit and saying that you have shown your exempt supply to this extent, so accordingly you have not reversed the input tax credit. So this is one common problem we are facing with this table 5 exempted supply, because they are considering as a whole exempt supply. So you have to be very careful in bifurcating your supply with exempted supply, non-GST supply and nil rated supply. There was one more issue where we had is there were certain reimbursement of expenses, right? So reimbursement of expenses, we always found that there is no table required to disclose your reimbursement of expenses, because what we are reimbursing, we are paying to the respective person and it is just a reimbursement cost. But there was an allegation by the department in the notice saying that you have not disclosed the reimbursement of expenses in your table 5 and accordingly it should be treated as an exempt supply. But still we are litigating saying that there is no question of supply itself, it is just a reimbursement of expenses. So that is also one more aspect which is happening. And second is this pure agent where, like for example electricity, where we are just collecting and paying to the board, whether those transactions should also come into this GST. According to me it should not come, because you are just collecting as a pure agent and fulfilling those conditions. But still there are a lot of interpretation what should be included in non-GST supply. Is it all your third schedule supply should be added, or non-taxable supply should be added, or some petroleum product, this alcohol which is excluded from the GST are added. So there is a lot of disparity on this non-GST supply. But instruction also just says that non-GST supplies includes your no supply, that is your third schedule items. It also includes this alcohol, petrol, also it includes your IC sales, sale from bonded warehouse, merchanting trade. So basically they are trying to cover all those entries in your non-GST supply. And nil rated and exempted supply, there is an option, you can consolidate and show it in one column, or you can separately show what is nil rated supply, because if you read strictly the definition of exempt supply, it also includes the nil rated supply as well as the non-taxable supply, right? So these are the things which we have to see, which are nil rated, exempted, you have to bifurcate here, and accordingly you have to disclose, right? So credit note, debit note, whatever this separately you have to specify for all those above entries separately. Don't merge it with your exempt supply. Separately show the credit note and debit note also, and excludes your financial credit note, debit note. Same thing what is applicable for table 4 is applicable to table 5 also. And very important is 5N is the most important table for us today, because this 5N table is the table which is taken in your 9C. What is this table 5N is included here? This will include all your taxable supplies, that is from your table 4. This will include your exempted supply minus 4G. What is 4G? Just now we read RCM, right? So RCM is excluded in 5N. So ultimately your turnover will be taxable supplies plus exempted supply minus inward supply on which you are liable to pay a reverse charge. So this will be excluded, because this figure will help us out to reconcile in your 9C. So this you have to reconfirm this, right? So this is what from the outward supply. I will only talk on outward supply now, right? So I am only going to talk on those tables which is talking on outward supply, so that it is easy for me to explain and take it. This I'll take it up later on credit part. I will not mix it up. I'll just go to table 9. Yes. Now, after table 4, whenever you are filling also your 9, please don't try to fill table sequence wise. For outward supply, first pick it up table 4, pick table 5, go to table 9, right? Then in table 9, just try to see what is the payable here. I will give the same example. On 5 crore, you were liable to pay 75 lakhs, and on 4 crores, you were liable to pay 50 lakhs. Now here, tax payable will be picked up from where? It will be picked up from where? It will pick up from? This will be auto-populated. Whatever you have paid from your credit ledger and cash ledger, that will be auto-populated. No problem, no issues. I am asking this part, tax payable. This tax payable, it is from R1? It is from R1 or is it from table 4? It should be from table 4. What you have disclosed in table 4? On 5 crore, 75 lakhs, right? What was there in your GSTR 1? On 4 crore, 50 lakhs. So how much it will come here? How much it will come here? 75 lakhs. What you have already paid? 50 lakhs. So how much is the balance payable? 25 lakhs. Got the point? So here payable should match with your 4N. Or what is your table 4? Whatever the liability you are showing in your table 4, that should match here, right? Very important point. This is a cross reconciliation. Don't show from your GSTR 1. Again, it will be a wrong GSTR 9 then. You have to show whatever you have shown as per your books of accounts, right? Whatever you have paid during the financial year will come here, and this will be reconciled from table 4. Next, this is also mandatory. Table 10, table 11 is also mandatory. What are the transactions which should come here? The transaction which you have missed out to disclose in 22-23, but you have disclosed in 23-24 up to say due date of your October returns. So whatever you have added, you please add it in table 10. Whatever you have reduced, it should come in table 11. Are you able to understand? Whatever you have made an amendment to your supplies, which you have disclosed in 22-23, you have made an amendment either by increasing or reducing, or either by issuing credit note or debit note. All those transactions should come in table 10 and 11. But if you see the heading, it says, what it says? April to September. Don't confuse. The format of return is like that, but for our disclosure purpose, it should be April to October, right? Due date of your October return, which is filed up to 30th November, you can add it here. And your auto-populated will show here, but you have to pick it from your books of accounts or whatever your returns you have made an amendment. Please pick it up accordingly in your table 10 and 11. Next, because of this, there is an additional payable. What you will do? Because of this table 10 and 11, how much I disclosed? 4.5, whereas now it is, 50 lakhs I have paid, whereas it is 75 lakhs. So additionally 25 lakhs you can pay through GSTR 9 also. You can pay either through GSTR 9 or you still do not want to pay through 9, you can pay through 9C also. Wherever it is below 5 crore, where you are not required to file 9C, you can pay through GSTR 9, which is the table differential tax paid on account of declaration in 10 and 11. This is table 14. You have to disclose that 25 lakhs. How much is payable? Payable. And if you are paid, please show it as 25 lakhs. Otherwise, just show it as payable 25 lakhs. Am I clear? Next. Next is, you have to go to this table. HSN-wise summary of outward supplies. You have to reconcile what annual turnover you have disclosed in your table 4, table 5 is matching with the taxable value which is given in table 17. Here you should not include your exempt supply, you may not include non-GST supply, or you may not include inward supplies, but there is nothing like you cannot do it here. You can still add it if you want to show it. Otherwise, they are asking here taxable value. So basically, they are reflecting more on taxable supplies. So accordingly, you can disclose the taxable supplies. Please reconfirm the figures, what is there in your table 4, 10, 11, matching with table 17. This HSN can be auto-populated from GSTR 1 itself, because in GSTR 1 you would have already updated your SAC code and HSN code. But here you have to give other details also, quantity details if it is applicable, unique code, then taxable value, rate of tax, with all this cess, IGST, you have to bifurcate the tax component also, and this tax component also should match with your table 4. So this is mandatory, you have to fill these informations, and you can use your table 12 for. We have suggested you would have done this auto-populated, but it may not be correct because your figures might vary when you are filing your GSTR 9 as compared to your GSTR 1. So this is the sequence you have to follow in your GSTR 9, table 4, table 5, table 9, table 10, table 11, table 14, and table 17. First, finish all your outward transactions with this channel, right? Now, let us go to the, any doubt on outward? Yes. Yeah, because now they made an amendment from 2021 that if your turnover is above 5 crore, you have to add 6 digits. If it is below 5 crore, it is 4 digits. So if you don't have, how you are doing in GSTR 1? Okay. It's happening? But because it is mandated that it should be 6 digit, you have to add up that actually. But I think most of the products are there at 6 digit, no? I think. Acha, primary producers. Okay. There you can add 00. Don't add, add it as prefix, right? Yes. Financial credit note will come in 9C. There's a reconciliation item in 9C. There you have to disclose. In GSTR 9, you have to disclose only GST credit notes. So it will be 9C figure and not 9 figure. Because government is not interested to know, because it will not have any impact on GST. Financial credit notes are issued which are beyond the due date of your GST credit notes. So it will not have any implication of GST. So accordingly, they have not prescribed in 9. But as a reconciliation item between the turnover of your books of accounts and turnover of your GST, they have added in, they are prescribed in 9C. Yes. Credit, yes. Credit. It will lead into a liability. Yes. Yes. Correct. Yes, yes. And show it in table 9 of your 9C. Reasons why it is different. 9C. In table 9 of 9C. Reason. Yes. Sir, please give the mic. We have lot of other interesting issues also, but you can just tell us, like.
Sometimes what happens, the GSTR 9 tax payable figures ignore values of March 23, if you are taking all automated values.
Ignore value of March.
March, sometimes.
9, no?
Yes.
When GSTR 9 is auto-populated. Possible.
Lots of times, and even if you try correcting, refreshing, nothing works. It
Yes,
takes
yes.
only figures of 11 months. Your tax paid will be correct, but still you will be having a lot of difficulty.
Possible.
But there is no solution to that. Like
No, you have to correct it.
No, it's not editable at all.
It's not editing also. Okay, what is shown in ITC, that is, you are saying that it is considered only for 11 months,
Yes.
not for 12 months.
I mean, like the March figures were, we actually checked why is the difference there. it has ignored the March figures. Like mandatory, the table 4 was completely correct.
Okay,
The tax was also correct there, but the tax figure which came out here was not correct.
okay. Anybody else face this issue? Because to my experience, I couldn't, might be you might have faced it. You can just, I think, put a query to that glitch. Huh. Got it rectified, no? Yeah. Possible, because you can raise the query and they will try to rectify. Might be some technical glitch. Otherwise, generally it is taking the figures up to March auto-pop. Most of the cases we have seen, it is reconciled, that paid from the credit ledger and cash ledger. Yeah. Any other issues from outward perspective? Tax payable, please understand, tax payable can be corrected. Tax paid is auto-populated, whether it is from cash ledger or credit ledger. Whatever the difference, reason, you have to give it in 9C. Tax payable you can edit. You can give the actual figures of tax payable here. Right? Anybody else? Shall I proceed? Now I'll go with ITC, that is more interesting than. And here in this tax payable, please bifurcate your interest, late fee, penalty also. Whenever you are going, you want to pay any interest also, please add it up in this column itself. Yeah. Now let us come to the most confusing, most different views. Very important is the information is auto-populated in 6A from 3B. Whatever you have disclosed in your 3B, it will get auto-populated in 6A. Now your duty is to reconcile this total with whatever the columns they have given in table 6B to all the up to 6M or 6H, whatever it is. The most important table for you is 6B and 6H. Because this table has again reconciliation in table 8 also. So what is 6B is important. 6B is you have to bifurcate your input services, excluding the reverse charge, excluding your imports, excluding your inward supplies liable for reverse charge, but includes the service received from SEZ. This in credit should be added here. Either it can be as in the form of inputs, input services and capital goods. For this year, they have given an option that you can include input services in inputs also. But capital goods has to be disclosed separately. But I advise you, don't follow options whatever is given. All those options are reopened when they are issuing the notices. So try to give us all the informations which is required as per the returns. So bifurcate your inputs, capital goods and services. Right? And next is, most important is, this information in some of our returns, we have shown it as gross. In some of the returns, we have shown it as net of credit notes. You agree or you don't agree? This 4F5 is more dangerous now because it can be shown either gross and you can show the reversal in your 4B2 or you can show it as net. Now what happens if it is shown as net? Then again your reversal will be a issue now. So whatever you would have shown, net or gross, it has to reconcile with your 3B informations, right? And this information has to be picked up from 4A5 of either old return or new returns. It is same table which you have to pick it up from that respective ledger. And I already have shown you there is an option to show your input services and under inputs. However, capital goods can be shown separately. Now, very important is don't include the credit. Don't include the credit which was availed, reversed and again reclaimed it. Don't include in 6B, which is that credit which you have already availed, reversed, again reclaimed it. In 4D1, don't add it in 6B2. Otherwise your disclosure will be wrong. So don't exclude that. There is a separate table for that where you have to add it. So here you don't add that figure, right? Am I clear? which you have already availed, reversed and reclaimed, don't add it. That is what the instruction is also there, and I have also just specified here. Now next is, you are clear with 6B? Yes? Now next is 6C. What 6C is saying? Inward supplies liable for reverse charge. It can be from URD person or it can be from registered person, right? Both 9.3 and 9.4 are possible. 9.4 majorly we are looking for real estate, otherwise majorly it is 9.3 which is happening. Now here is, when you are disclosing on reverse charge, here also that option is there. Capital goods has to be disclosed separately. Input and input services can be merged. But here on the reverse charge on which tax is paid and ITC is availed, what they are writing here? On which you have already paid the taxes and availed the credit in that respective year. So this 6C and 6D has to match or has to see that it should not exceed what is there in 4G. What was 4G? What was 4G? What you have taxes paid on RCM, please have a reconcile, because your credit should not go beyond what is there in 4G, right? It can be less, subject to some restriction, but it cannot be more than your 4G. This is one more reconciliation you have to make it here. Next, you can merge it registered, unregistered, but I think more or less all of them are either from 6C and 6D. Now next is import of goods. Specifically, you have to re-enter these data, including supplies, whatever you are receiving from SEZ should be consolidated. All your imports from outside the territory of India and import from SEZ should be consolidated and entered as inputs and capital goods. Separately, you have to disclose it. These figures will be there in your 4A1 separately, no problem, and you will get the information from iSCATE. Don't add custom duties. Don't add cess. Only add the IGST component in this table, because few returns we have seen consolidated. Don't make mistake of that. Please add only ITC pertaining. Next is import of services. Why they have excluded inward supplies from SEZ? Because it is exempted by way of notification 15/2017. Any inward supplies from. So that's the reason they have added import of services here specifically. Though we had 4B and 4C and 4D as RCM, don't include import of services here. There is a separate table for import of services. Please show that import of services. Whatever you would have paid under reverse charge, you have to show it as a separately. Am I clear? So registered person, unregistered person and import of services, all these three are reverse charge credit which has to be disclosed separately. Clear? Now, next is input tax credit received from ISD distributor, which we are clear. Whatever is distributed, that credit is eligible. That is a separate table. Now this is a table which we are looking now. Amount of ITC reclaimed. There was one person who asked me the query, Madam, can we include this? Recently, some of you might have filed this reversal and reclaim statement. How many of you have filed that? The last date was 30th November 2023. Okay, you have. How many of us have filed? There was, I think most of them are aware or not. There was a statement. There was an advisory which was issued that you have to file your reversal and reclaim statement for the up to July 2023, right? I think few of them would have already filed, few of them might have not aware of that. And if you have already filed, if you have not filed, I think the November date was there, but nothing wrong in filing again, because still you have time till 30th December to do the amendment, right? So somebody was asking, should we use that credit and to show it in IC? No. That is a separate statement. Don't mix that statement with this statement, right? This is the first aspect. Second is, what will come in 6H here? Whatever the credit you have availed in that year and reversed and reclaimed in that year, that amount will come in 6H. If you have availed in that year, but if you have reversed and re-availed in the next year, then it will not come in that respective column. Only the column says which is availed and reversed and reclaimed will come in that entry. So very important is ITC availed and reversed during 22-23 and reclaimed in 23-24 will not come here. Am I clear? So the transaction which has happened only in 22-23 of availment and reversement and reclaiming should come in table 6H. Clear? Next. Ultimately, your difference should be 0. Why? Your J should be 0, but most of our cases, is it happening? It's not happening. Most of the cases, there is a difference. So, what to do with that difference? You have to understand why the difference is. Is it due to transitional credit or is it any other ITC? So, most of us, what we are doing, when we are not able to identify what we are doing, we are taking it as any other ITC and we are disclosing as a other ITC also. So, whichever you are not able to come out, please try to do that reconciliation. More or less, if it is accurate, it will match. Otherwise, it will fall into any other ITC. Now, the next question is, what all can come into this ITC? It can be through ITC 1, ITC 2, ITC 3. I think you know that whenever we are changing the scheme or whenever taxable is becoming exempted or regular to composition or all these credits which is, or because of sale of business, there will be some credit which will be transferred. All those credits will come into this table 6M or any other credits. So this is most, now the issue is, how about this transitional credit? Because this is nowhere relevant. But as you all know, last year we had a window opened, right? Based on Philco decision, they have given a window to the taxpayers to file the transitional credit again. And I think most of us would have, a few of them would have filed this transition credit. Few of them got a favorable order, few of them got rejected. Again, we filed the appeal. So all these things has happened for transition credit. If it is already recredited, if you have already availed, you can include that credit also if it is already there in your credit ledger. If you want, you can not want, you have to disclose if it is already credited. But if it is in dispute, then it is not required to be disclosed. This is what the table is talking. Now let us go into the next important aspect. Credit I have shown. This reversal can be reduced only when I show the gross credit. Many times what happened, after reversal I have shown my net credit. So in that case, what is happening? What few of the entities we are using, that is not the right practice, but we don't have any other option. We have to disclose the reversal. So what I will do, I will add those reversals in any other ITC availed. You got the point? I will add that reversal and disclose those reversals here, wherever I have netted it off, because I want to show the correct figure to the government. Here I have to bifurcate my reversals. What is 37? Not paid within 180 days, right? 39, ISD. 42, input and input services. 43, capital goods. 17.5, block credit. Trans 1, Trans 2, and other reversals. They have given an option. If you want, you can disclose, you can't bifurcate which is 37, 39, 42. You can disclose all that in other reversal. But Trans 1 credit and Trans 2 credit has to be disclosed separately, right? So I think this is what is given in the instruction. You have to be very careful when you're disclosing these reversals, because it is as per 3B you are going to disclose or as per your books you are going to disclose. As per 3B. So if it is excess reversal, you want to reverse excess, where you will give the impact of that? Huh? In 9C, if I am not supposed to file 9C, then I can show it in table 9 by showing my excess reversal, giving impact to my table 7 other reversal, and create a liability, right? If my 9C I am getting filed, then I can give the impact to my table 14, 15, 16, whatever it is. In that case, I can give the impact. So even if you want to do the excess reversal, in most of the cases, we are following 3B here. Yes? And whatever excess reversal I have to do in the books, we are doing through 9C. I think that is a better way for explanation to the department also, right? So you have to bifurcate. I advise, please bifurcate the credit wherever possible. Whether it is 42, 43, 37, 39, where you are not able to bifurcate, you can just show it as a other reversal except trans credit. I've given all this, the instructions are there. Now is the most important table, which the department is more interested. Here the source of information is as per 2A. What is the source of information today? Is it 2B or 2A? For 3 months it was 2A, for 9 months it was 2B. But if you see here auto population, where is the source of information? It's still 2A. This is the one issue. Next is, it will auto populate, or it will you have to do the sum of 6B and 6H. What was 6B? What was 6B I was saying here? 6B was your inward supplies other than reverse charge. Whatever is your input tax credit, that is coming here. Plus whatever you have reclaimed in that respective year. 6H, amount of ITC reclaimed. These two will get added with your reconciliation with your 2A. Am I not confusing? Hope I am not confusing. It's just, table 8 is nothing but reconciliation with your 2A. What is reconciliation with your 2A? First of all, source itself is not correct. It should not be 2A, it should be 2B. I actually feel this should be removed. Table 8 is not serving any purpose. What we are doing, whatever is auto-populated 2A, we are trying to reconcile our figures. We are trying to bring some figures from 6B, 6H. We are trying to see what are the credit is there between April to October and trying to reconcile with our GST 2A. It should be your there is a possibility of positive figures or negative figures. If it is a negative, if you have avoided the credit more than 2A, what will happen? What you will expect? Notice is expected. If it is positive, if your credit is less than 2A, no issues. But if your credits are more than your 2A, you are expecting a notice. So be careful when you are filing your table 8. It should be seen that don't show a negative figure. And after that, there is a column. I think we have to be very careful. Don't try to fill these figures. Though I am not supposed to say, but I am still saying you can be silent on this. Because here it is showing some difference. We don't know what is the difference. You voluntarily itself don't agree that available but not availed, or available but ineligible. You don't know what is the difference figure. So better don't report if you are not able to know the exact figure, or you are not able to calculate the exact figure. If you know, yes, it is not available or ineligible, please fill the details. But I advise not to fill the wrong details here. Otherwise, voluntarily, the government will say, voluntarily, you only have stated in your return that it is ineligible or not available. Tomorrow, you want to differentiate between 2A and 3B, it may not help you out. So, filling this figure is very important when you are filing your GSTR 9. Next. Yes.
Regarding the restaurant service, I am under the regular scheme, which my output tax is attractive 5%.
No credit.
I am not eligible to take any
Credit. Yes.
In the previous slide which you said, not eligible or ineligible. Do I need to classify over there?
I'll just tell you what is happening around. Most of the entities who are liable for taxes without ITC are not showing ITC. You agree or you don't agree? Or they are not disclosing that ITC itself. What the notification or circular in 2022 has stated that you have to disclose that credit and show it as permanent reversal. Nothing wrong in that. You have to show that credit of 4A5, show it as a 4B1 and be silent. I will tell you what is the other implication, what the government is facing because of this. I don't know, some of you would have received the call from the department. Some of the real estate industry and some of the exempted sectors are already receiving the calls from the department asking them, please fill the GSTR 3B with credit and with reversal. Why? Why they are asking them to fill the details? Otherwise, government is losing the revenue because it is a reversal for you, but government cannot claim it from the central government. Why? Because to the extent of IGST, what you are not liable to claim credit, to that extent it has to be disclosed in your 3B, then only they can identify how much is a credit which is reversed because of this rate notification. How much is a credit which is ineligible? It will help them out for their settlement of funds between the central government and state government. And you know, last, sir, I was able to see last 6 months, some few of the team members are only working on this. They have the certain data, back-end data, where they are able to get the information, which are the entities which are liable for paying the taxes without the credit, and those credits are not disclosed in 3B. And if it is not disclosed in 3B, it will be not reflected in their liability, and accordingly they cannot claim from the governments. So their whole formula will fail without disclosing. That's why last year when they have issued the instruction, they specifically said, even though it is ineligible, even though it is not required, you have to show it in 4A5, show it as a 4B1 and be silent. Your duty is to disclose, whether you are a construction sector or a restaurant sector or any other sector, even if your clients are there, please see that they disclose in 3B. Otherwise, the department itself are calling and saying, please do that. Otherwise, the government is going to lose the revenue, whatever they are supposed to get that revenue. So, as per that instruction also, sir, you have to disclose it. Though it is ineligible, show it as permanent reversal in 4B1. Though you are not eligible, but still disclosure is required in your 3B as well as in 9. Right, sir? If you are not disclosed till now, don't worry. Now onwards, you start disclosing. Next. Put it at least from April, government will get something. Because last year anyway the time is over, nothing wrong if you add it up also. Anyway you are not eligible, no problem of restriction, so please put it and show it as reversal.
There's a one saying that anything which apparently should appear on 1 and 3B is the correct figure, and any other, even including 9 or 9C, whatever you quote, it may be a additional evidence.
Yes.
But whatever you want
Yes.
to put it in 1
Yes.
and 3B.
Yes, yes. Yes, sir. Because that is a return which you are supposed to file it monthly wise. That is an assessment order, I can say, self-assessment order. Yes. So the next important issue what I want to discuss is regarding this reverse charge. I think I'll just take up that issue when it comes. This part I want to disclose it. Then next is table 13 and 14, 12 and 13. I'm just finishing the input tax credit part and then I will explain you the issues, how to disclose. Next is reversal of ITC availed during the previous financial year, table 12, and table 13 is whatever credit you have availed pertaining to the previous year. This information you have to disclose if you have taken the credit pertaining to 22-23 in the current year up to November 30th, 2023. Whatever the credit you have taken, you have to disclose in this table. These tables are optional. This 12-13 table is optional. 10-11 table is mandatory, but still I request you to please fill these details. It will definitely help you out to avail the credit if you have taken in the subsequent financial year. Now the next problem what you are facing here is reverse charge tax I have paid in the last year. I have given the practical issues, but I still want to discuss on that. Reverse charge tax is, say for example, January 2023, the legal advisor has issued an invoice. Or December 2022, the legal advisor has issued an invoice. Am I liable to pay under reverse charge? Yes or no? As a recipient entity, I am liable to pay under reverse charge. I realized that in, say, July 2023, saying that I am liable to pay on that reverse charge. What I will do? When I am going to pay? When I am going to file my July returns. I will pay through cash ledger by disclosing in 3B and also avail the credit in 3B in the July 2023. Now my question to all of you is, should that entry should come in my GSTR 9 and 9C? Because when is the invoice related? I want your attention on this. When is the invoice related? December 2022. What is the provision says section 13 of your GST access? whenever you are making a payment or within 60 days from the date of your invoice. So already 60 days is over. When it is over? Say February it has got over. After that I am liable to pay, I have paid in July. So am I liable to pay with interest or without interest? No doubt it is with interest, right? So when I paid? In July 2023. Now my question to all of you is whether this reverse charge which I paid in July should be disclosed in my annual return of 22-23 or will it be an item of 23-24? You got the scenario? Very simple scenario I am trying to put it. My question is whether it should come in 22-23 or 23-24. Huh? 20, which one you are saying? 22-23. Any other answer? 23-24. There is a press release which is issued in 2019 where they have clarified it should be disclosed in the year in which the payment is made. When the payment is made? So when you are going to disclose? In the annual return of 23-24. Payment of GST and a reverse charge. Payment, you make it, that is a different case. That is not the point here. Here we have to identify in which year we are going to disclose in our return. This is the first point. I will little more twist to that. That legal advisor who has issued this invoice to me, say 1 lakh he has issued, I have paid 18,000 in July 23 and I have taken credit in 23. I will disclose in my annual return of 23-24. There is a second twist to this. Legal advisor said, no, this, I as a recipient, before paying, I said it is quite high, I will issue the credit note. Got the point? I said, please negotiate it. He issued me the invoice of 1 lakh. What I did, I said, no, 1 lakh is quite high. I already paid that July, whatever is there, I have already paid, taken credit. But when I have to negotiate with my lawyer, I said it is quite high, I will raise the credit note because the work what you are supposed to complete for this 1 lakh is not completed. So I will raise the credit note for that. Possible, na? So I will issue the credit note to him. That 1 lakh got converted into 60,000. Got the point? So the credit note is issued only for 40,000. This is happening in practical scenario I am saying. So 40,000 I issued the credit note to my lawyer. How much I have paid already? 18,000 I have already paid. I have already taken the credit. Now what I should give the impact for this credit note? No, I paid 18% on full 1 lakh. But what is my value actually? 60,000. So how much I have to take credit? Am I eligible for credit for which the invoice is not there? So what you have to do? You have to reverse or you have to not reverse? Can you take the credit on which you don't have invoice? You have invoice only of 60,000. Whereas you have paid 18,000. 18,000 credit, see payment no issues. You can pay excess, no problem. But can you take the whole credit without invoice? 31.5 will not agree. So what you can do is, show that difference output, nothing, it's a revenue neutral. Show that difference as output, show that difference credit as reversal of credit, and please nullify it. Don't keep as it is. You got the point? No impact of additional payment. Show that output, show that reversal, close the issues. I think you have to show the actual tax payment that is on 60,000 whatever is there. To that extent, the amount of reverse charge liability should be there in your books of accounts as well as in your returns. Clear? Third issue. I'll take only 3 issues for reverse charge. 22-23, I have paid the taxes, reverse charge. I've already paid the reverse charge in 22-23. I have taken the credit also in 22-23. I want to reverse the credit because I am not eligible for that credit. When I reverse that credit? In 23-24. I have reversed in July, say August 2023. Where I should disclose this? You got the point? I availed, I paid in 22-23. It will come in my return, yes or no? Yes. I have reversed that credit because I am not eligible. That reversal will come in which part, which table? Table 12 and table 13, whatever it is, that reversal, table 13. The amount which is pertaining to the reversal will come into that entry. This is a one school of thought. But according to me, it should come as an amendment to the, because already I have paid and taken credit in which year? 22-23, so it is an item of 22-23, so it should come in the return of 22 and 23 itself. Hope I have not confused this. I have just tried to give the different scenarios for reverse charge. You have to be very careful when you are filing of your returns in a different scenario. So the simple concept is the year in which you are making a payment, the year in which you are taking a credit, that year should be your year of disclosing your reverse charge payment in your annual returns, right? Irrespective of the invoices pertaining to the previous year. This is the one point I think which we can bring out. Next is the wrong payment of taxes. I have made a wrong payment of taxes. Instead of paying IGST, I paid CGST, SGST, or instead of IGST, CGST, whatever it is. Where it will come now? I'm not talking of ITC, I'm talking of outward taxes. I have shown everything as per my books here in my table 4. I'm asking you where it will come here. I have paid wrong tax. Instead of IGST, I have shown as CGST, SGST. What I should do? Should I disclose in table 4 or not? What I have to show? Correct taxes or wrong taxes? Correct. Then what you will give impact to wrong taxes? Wrong taxes, what you will show? You have to show that the correct taxes as liability, and wrong taxes you have to apply for refund. But when you are disclosing in GSTR 9, don't disclose wrong taxes. Disclose the correct taxes. Your invoice is showing IGST, your return also should show IGST. Even though your 3B is showing CGST and SGST. Please pay the correct taxes and claim the refund of wrong taxes. We are getting the refund. It's a not very hard task, it's a simple process. Please don't make the mistakes, and anyway no time limit also. 77 is saying not much time limit is there. So you can still apply if it is pertaining to the earlier years also. So this is one more aspect I want to share it with the members, right? Next. There is a sale of asset which has happened, but I have not disclosed in my 3B, nor I have shown in my GSTR 1. Can I show it in 9? There is a sale of asset, capital goods. Can I show it in GSTR 9 or not? Because I am not shown in 3B, and so which table I will show? Table 4, very clear. All taxable transactions will come in table 4. All exempted transactions will come in table 5. So on what value you will be paying? On your realizable value, you are supposed to show the taxes, except for motor vehicle. There is a specific notification to pay it on a differential value, right? So these are the certain intricacies there are there. We'll just go through that issues. So I'll just move on to the 9C, and we'll try to link with this 9 also, how it is important. And somebody was asking me on unbilled revenue. I'll just share it on that part. Yes. Can you just repeat your question, sir?
The RCM liability was under IGST. I have paid it under CGST and SGST.
Okay.
And while doing the GST 9, I realized this mistake.
What you have taken the credit?
CGST and SGST.
Okay.
So how do we correct this in GST?
So you have paid it as
CGST and SGST.
wrong taxes?
Yes.
So can you, because output tax also doesn't include this taxes paid under reverse charge, so it will not fit into 77 also. So wrong taxes.
Yes. So Ma'am, how do I present this? Say,
See, what I'll just tell you how it is going on around for this issue. Outward supply is very clear. Inward supply is a task, whether it is a reverse charge or whether it is a regular transactions, regular inward supplies. We are facing this issue wherever we have taken a wrong credit of CGST, SGST, whereas the actual credit was IGST. We are trying to give certain, like Saji cases there of Kerala High Court. We are trying to give the submission where they are saying that it is a revenue neutral and it is not impacting any wrong taxes, but the department says that already their funds are settled and they cannot again rework on that. So basically they are asking you to pay the, take the correct credit and pay the wrong credit which has been availed. So that is a point of argument which is there before the courts actually.
so here when I pay the IGST now, I can.
I know you have paid it, but again you have to argue for that.
No, no, ma'am. What I mean is, when I pay the correct tax now of IGST, I will not be able to take the input because the time limit has already lapsed. But the SGST and CGST input which I have already taken, should I reverse it here?
No, because again you will be, if you reverse that credit, then it will be a big impact for you then. Because you cannot take the credit of IGST because the time limit is over. So don't reverse that credit. Please litigate for that issue.
Can't
Because
I claim a refund for the payment that we made?
yes, yes, you can take the refund of that. Yes. So now we'll proceed for this 9C. I've added whatever we have discussed here. I've just added. If required, we can discuss on that
Excuse me,
later.
ma'am.
Now let us go to the impact of 9C.
Ma'am?
Yes.
Ma'am, ITC of financial year 22-23 taken in financial year 23-24,
Huh.
where we need to show it in table 9?
In table 9, it will be in table 12 and table 13 of your GSTR 9. If you go to table here, if you look
Then
here,
my table 8 will not match. It will not reconcile.
see if you, I'll just tell you like how to disclose that. Table 12 is talking of reversal of ITC which is availed in the previous year, but you are taken in your GSTR 3B of the current year, right? So if you have reversed it, it should come here. If you want to avail it from April to October, it should be shown in table 13. So when you are going to reconcile with your books of accounts, you are also going to add and less this 12 and 13 also. Along with your current credit of 7, you also will give impact to your 12 and 13 also, right? So this will take care of with your books of accounts.
But ma'am, table 8 will not match because the data is coming from 2A, which contains the...
So, Madam, 2A will never match. Table 8 is subject to a differentiation because the source of information is not from 2B, it is from 2A. So that will be subject to change. If you can give the reasons, you can give the reasons in your input tax table in your 9C, if you have the reasons for the difference.
And it will not come in 6M.
Huh?
It will not come in 6M.
No, no, no. If you have taken in the 23-24, it will not come in 6M. It will be coming in table 12 and table 13. Right? So we'll proceed for 9C. Any other issues for 9? I will try to connect with the 9 and 9C also. Certain issues are there. We'll just try to link. I've given certain. This will be shared with the members. So I've added also how to disclose. Now, the most important is 9C because this is also one of the source of informations for the audit. Certain details are auto-populated. 9C is not auto-populated. You have to prepare and send it. And there's one more very important is, whenever you are going to file 9, you have to file 9C also, right? If you are not filing 9C, you are not complying with the filing of the law and you will end up paying the penalty of under 125 and 122 as the case may be. So you have to see that you not only file 9, you also file 9C, then only it will be a complete filing of your returns. So here you have to disclose all your reconciliations of your turnover as per your balance sheet and as per your GST turnover. And very nicely they have structured this 9C considering what are the possible scenarios where there can be a reason of difference between your books of accounts and your GST turnover, because there are different point of taxation for the GST turnover which may not be, there will be different accounting standards for revenue recognizing for the income tax purpose. So it may have a differential value. So that's the reason we have to understand what are the reasons for the difference between the books of accounts as per the turnover as per your books of accounts and turnover as per your GST. So the very important point is unbilled revenue, which somebody was asking me at the beginning of the year, because this is the revenue which is not recognized in your books of accounts. But on that, you would have already paid the GST. So to reconcile with that, you have to add this turnover to your books of accounts. That is your opening, that is your unbilled revenue, which is there at the beginning of your financial year. And if there is something unbilled revenue at the end of the year, to that extent, you can reduce from your turnover. So to that extent, you would have already paid the GST. So that's why it has to be added to your audited turnover, right? Then unadjusted advances at the end of the financial year, because you would have already, based on time of point of taxation, the taxpayer would have already paid the taxes on advances, but that wouldn't have been recognized in your turnover for the income tax purpose. So to that extent, the amount will be added to your income tax turnover. Then deemed supply under Schedule 1, which is like, for example, there is a stock transfer between the states. That is not a turnover for the income tax purpose, but that is a turnover for the purpose of GST. So to that extent, it has to get added in your audited turnover. Then credit note issued after the end of the financial year, but reflected in your annual return. So which are issued post to your 31st March, to that extent it will get added to your audited turnover, because when you are going to finalize your books of accounts, you will be finalizing only for your transactions which has taken place up to 31st March 2023. So accordingly, this will also get added to your turnover. And trade discounts accounted for in your audited turnover will also come into picture. Then the turnover from April is not applicable, still it is not removed. Unbilled revenue at the end of the year, already I've told you it has to be reduced, unadjusted advances to be reduced, and credit notes accounted, that is your financial credit note. Somebody was asking me on this, even that also will get reduced, because for the GST turnover, financial credit notes doesn't have any impact. And adjustments on account of supply of goods by SEZ to a DTA units, as you all know, it is a supply, and to that extent it will be added as a turnover for the purpose of GST. Turnover for the period under composition scheme, if the taxpayer is for certain period he was under composition scheme and then he has come to a regular scheme, accordingly it will be adjusted. And all your valuation, because there is a different valuation principle for the GST and there is a different valuation mechanism for GST, if there is any variation because of that valuation principle, that also will get added or reduced. And if there is an adjustment due to foreign exchange fluctuations, because as you know, there is a specific rule which is specified that what rate of RBI rate or custom rate you have to follow when you are arriving the value for these currencies. So accordingly, there is the possibility of foreign exchange fluctuations when you are identifying your export turnover or import turnover. So to that extent, your turnover also will get adjusted. So basically, these are the above reasons which will get impacted when you are going to reconcile your GST turnover and your books turnover, right? So there is an option that you can disclose this in, but as of now, in 22-23, you have to mandatorily disclose all these reasons separately. You have to give the reason separately. You cannot just put it everything in 5O and keep quiet. That was there in the initial year, but that option is removed. You have to disclose all the reasons for the difference between this 5 and 5M. The next is, when you arrive your total turnover, you have to reduce your exempted turnover. You got the point? From your total turnover, you have to exclude your exempted turnover. That is your table. Which table I was talking on 9, which is talking on exempted? Table 5, right? So table 5 has to get reduced, and the balance will be your taxable turnover. I don't know how many of you would have seen in VAT, we add a system of total turnover less deductions and minus will be your taxable turnover. The same analogy is applied in 9C also. So accordingly, it is a taxable turnover which you have to arrive at after reducing your exempted turnover, right? So please reconcile these figures from your table file, and the same figures has to be replaced, has to be disclosed in your GSTR 9C. Now this part is very important. Now one more reconciliation what you have to do is, whatever the 7G amount is there here, please you have to look here that whatever the 7E figure is there, this figure should match in your table 9. Because in table 9, I am going to identify my turnover based on the rate of taxes. So this total turnover should match with my taxable turnover which has been identified in table 7, right? So I think this is, we have already discussed. So please be careful, your rate of taxes can be your 5%, 12%. If there is any additional tax, what we were talking it on 50 lakhs and 75 lakhs, that balance 25 lakhs also you can pay through this table also what we are discussing. Just another 5 minutes, sir. Yes. Hi, good evening everybody. Then next is, I think we have this rate of taxes. We have already discussed on output taxes. We have to bifurcate rate of taxes, and we are going to offer in our table 9 of GSTR 9. This table will be compared with the table 9 of your GSTR 9. What was the table 9 of GSTR 9? Tax payable, right? So whatever the tax payable you have shown it in your table 9, the same will be reconciled with the table 9 of your GSTR 9C. So always remember 9 should match with 9 in GSTR 9, right? So this is most important for you to remember it, right? Here they say it is to be paid through cash. This is the format, but when you are going to pay through DRC3, they will give you an option. Either you can pay it from your cash ledger or from your credit ledger. You can decide it and pay it accordingly, whether it can be 5%, 12%, 18%. And this year they have added additional rate of taxes also. That also you can make the payment. Either it can be central tax, state tax, or IGST or cess, as the case may be. Next, very important is 12. Just 10 days back we got a notice saying that whatever ITC you are showing in 9C is not matching with ITC in your table 6 and 7 of 9. Why it will not match? Because in 6 and 7 we are disclosing the figures as per our 3B, whereas in table 12, 13 what we are showing? We are reconciling with the as per your books of accounts, right? So there is a possibility, I think you can explain to the respective department why there can be a difference. Here ITC availed as per your audited figures should be feeded by the respective person. ITC booked in earlier financial year, claimed in the current year. So if it is pertaining to the 21-22, but you have booked in your books of accounts in 22-23, that will get added in your GSTR 12 table. Then ITC booked in current financial year to be claimed in subsequent financial year. For 22-23, I have claimed in 23-24, that will be reduced from that respective credit, and ultimately the ITC will be availed as per your audited books of accounts. This will be reconciled with your input tax credit, which we have taken as per our 3B. If there is a difference, the reason should be given for the difference between input tax credit availed as per your books of accounts and input tax credit availed as per your GSTR 3B also. So with these reasons, you will get to know whether there is an excess credit availed or whether there is a wrong credit availed or whether the credit is matching with my books of accounts. Table 12 itself will give the correct figure to understand why there is a difference. This table 14 is asking us to give the details of bifurcation of all the expenses with the bifurcation of input tax credit, eligible input tax credit. So you have to bifurcate all these expenses, but don't worry, for this 22-23 it is still optional. You can just give a consolidated data and you can just fill the consolidated ITC and you can just fill this 14. If you are able to give the bifurcation of these expenses, you can just fill that data and you can fill that respective table. Then whatever the difference because of ITC you want to pay it, please you can pay it through table 16. And you have to, there is a still column, though the auditor is not supposed to certify GSTR 9C, but still there is a column in GSTR 9 which is saying that auditor's recommendation on additional liability. So if you are not able to fill it in your respective table, this is still one more column where you can disclose what is the additional liability which you want to offer, whether it can be pertaining to your reversal of input tax credit or whether it is relating to your additional liability because of different rate of taxes. I think all those liability can be shown here and accordingly the liability can be paid. So ultimately the difference can be paid either through GSTR 9 or you can pay it through GSTR 9C. It is your decision to make a payment through 9C or 9 because both the way you have to make it through DRC3 and you have to use your credit ledger or cash ledger as the case may be, though the statement is saying that it should be paid through cash, but still the amendment has happened, so accordingly you can make a payment. Now I will, sir, can I take for another 10 minutes? 5 minutes shall I take? Yeah, 5 minutes, not more. This first slide we have already discussed, legal fees and the sale of asset. I will just try to finish it in 5 minutes. Then the next, I have just tried to bring out the practical issues which we were facing while filing 9 and 9C, so I thought I will discuss with the members. The taxpayer has availed this reverse charge. The taxpayer has made high C sale on 31st March 2023 amounting to 1.5 crore. But at the time of filing 3B, he has ignored it. He has not disclosed that transaction in his 3B. So what is the implication in GSTR 9C? You should answer this actually. Should I disclose or not disclose? High C sale. High C sale will come in which schedule? Huh? Third schedule, right? It's a non-GST supply. So you have to disclose in table 5 as well as in table 5 of your 9C also, right? Then the excess payment was paid on outward supply while filing 3B. What is the implication? I have made an excess payment while filing 3B, whereas as per my books it is less. What I can do in my 9C? My table 9 will show the excess payment, no issues on that. When you are showing in table 9 of your GSTR 9C, please give the reasons and please apply for a refund, or if you are able to set off with other liability, you can set off, or please put the reasons in your GSTR 9, table 9 of your 9C saying that why there is a excess payment of taxes, and accordingly you can apply for refund also. Exempt supply was disclosed as taxable supply. It is also, it's a kind of excess payment of taxes. And the taxpayer has pointed out at the time of filing GSTR 9 that some ineligible credit has been wrongly availed in 3B. What is the implication? Wrongly availed credit will lead into a additional liability, and accordingly it will be shown in your table GSTR 9 and as well as table 9 of your 9C and table 15 of your 9C also. I think this all we have discussed. Wrong taxes we have discussed. Reversal made, this also we have discussed. Yes. Somebody was asking me 4A, 4B2 and 4. I think now we are clear. 4A5 will come in 6B2. 4B1 will come in 7. And reclaim also will come in 6M, right? So this is what we have to remember when you are filing, because your 9 is not restructured according to your revised 2B. So you have to disclose in the respective tables. Yes, sir? Yes. 4D, there are two aspects, 4D1 and 4D2. 4D1 is the one which you have temporarily reversed it, you can reclaim it. That reclaim, if it is happening in that same respective year, it will come in 22-23. But if that reversal is happening in the next year, then it will come in the 23 and 24. You can read the instruction 13 of your GSTR 9. Specifically, they have stated in that. Got the point? Yes. So that's the instruction which is given. And yes, I think this all we have discussed. Advances also we have discussed. And gross input tax, net input tax credit we have discussed. So I think these are the certain things of reclaim of credit of current financial year and reclaim of credit. Please read the instruction 13 of your GSTR 9, which says that if you have reclaimed in the next year, it will be shown in the next year itself. If the credit is availed and reclaimed in that respective year, then it will be shown in that respective year. If you have availed the credit in 22-23, but if you have reversed in 23-24 and again re-availed in 23-24, then it will come in the annual return of 23-24 and not of 22 and 23. I think this is what the instruction given in table 13 of your GSTR 9, and accordingly you have to fill your GSTR 9 and 9C. So any other issues? I think, yes, sir. For 21-22, it is only for the table 11 and table 12. You please recheck it, whether it belongs to the last year or whether it belongs to the current financial year. So whenever you are going to file your GSTR 9 and 9C, please take last year GSTR 9 9C, take 3B, take GSTR 1, and if anything pertaining to the 21-22, taken in 22-23, it has to be excluded.
In the GSTR 9 and 9C tables, table 4, 5, 6, 7, whatever it is, last year it's a optional, current year.
Yes, current year, I'll just tell you which are the tables
which are all the mandatory now, current
yes,
year.
all are mandatory. I'll just tell you, all are mandatory except in table 6, you have the option of input and input services. That is the one table. And table 13 and 14 is an optional. And table 15 and 16 is optional. And table 18 is optional. Table 18 is pertaining to your inward supplies. That is also optional in table GSTR 9. And GSTR 9C, you have the table optional for table 14, where we give the bifurcation of the expenses. That is the one table which is optional in GSTR 9C.
Table number 14.
Yes. Yes, so I think, anything else? Any other queries? We'll wind up? Yes. Yes, sir.
Non-mandatory case of 9, though we have exercised to filing 9, and is it compulsory to file 9, 6?
I have already told you, 9C has to be filed where your aggregate turnover is above 5 crore. If it is below 5 crore, you can file only GSTR 9 and you can close it accordingly. And one more very important table is, there is a table called as, you have to fill the details of refund claimed or any demand issued for that respective year. But it is not required that demand should be issued for that respective year. In 22-23, you can receive the show cause notice or order for 17-18 or 18-19 also. Even those details also should be filled in your respective table, whether it is relating to refund or whether it is relating to the demand from the department. Both details has to be disclosed in your table respectively. Yes? So outward HSN is important, inward HSN is not mandatory, it is optional. You still want to disclose, you can still disclose on that, otherwise it is optional. Yes, anything else? I think with this, sir, can we, so with this I thank all the members for an active participation and listening it and participating in this practical issues of GSTR 9C and a lot of recent amendments we had discussed. With this, I thank Bangalore branch of ICI for giving me an opportunity, and I thank all my seniors sitting here in front of me, and I'm very obliged and very privileged to stand before you and share this topic on this. With this, I thank all the members for this interactive participation. Thank you one and all. Thank you all the best for the GSTR 9 and 9C. Thank you.
Members, before the formal vote of thanks, I would like to recognize the presence of Chairman of SIRC, CA Pannaraj sir, Vice Chairperson of SIRC, CA Geeta AB Madam, CA SS Nayak sir, CA Ravindra S. Kore Past Chairman, and CA Srinivasa T, immediate Past Chairman of Bangalore branch. Now I request CA Pannaraj sir to address the gathering for a few minutes.
ಎಲ್ರಿಗೂ ನಮಸ್ಕಾರ. I am very happy to be here accidentally on this dais. Even though I was in Bangalore, I did not know that this program is going on. Thank you, Managing Committee of Bangalore branch, Chairman, Vice Chairman, and my colleague in the Council and Vice Chairperson of SIRC. I think most of you must be knowing both Chairperson and Vice Chairperson from Karnataka for the first time in 70 years history from Karnataka. And I am proud that next year also it will be the privilege of Karnataka and especially Bangalore to have SIRC Chairperson from here. And also I recognize the presence of Mr. SS Naik, who is deemed to be the MSME man. He has a vast knowledge on MSMEs, and I am very passionate about MSME programs, and we are doing one such program about which I will be talking now. And also part chairman and all the other managing committee members of Bangalore branch, and Madam Speaker Annapurna Kabra ji, and my dear members. I will not take more than 5 minutes. Be rest assured, I know the amount of empty chairs are more than the members present here. Today, I think it is a very important topic that you have covered today. That is on 9.9c, the deadline for which is very fast approaching. It's only last minute refurbishing of the knowledge that you already have. And we are always having many doubts when we sit on the systems and try to file the returns online, and all doubts of such nature are, I think, clarified today here. And I think for the first time I am addressing members in Bangalore branch after taking over as chairman. Only one time I had come for the takeover of the Divya on some day, I don't remember the date, in February, and conference with Bangalore branch venue. That is all Karnataka branch. All Karnataka branches hosted by Karnataka I have spoken, and I attended only one students program here, and I keep coming hereafter. The difficulty in reaching from Bellary to Chennai, so maybe I have skipped many programs at Bangalore. And today I am here, first of all, to thank you all for creating history by your excellent participation in good number for Gnana Sampanna, the 55th regional conference that was held at Hospet. A history is created, and thank you very much for that. And the highest number of participation was from Bangalore branch in numbers, even though if not in proportion, percentage. And to my surprise, it was Gulbarga branch, as far as percentage of participation is concerned, it was the highest, and they were given some special consolation memento for that. And as far as SIRC activities is concerned, I am stressing more on the practice of small and medium practitioners. The automation, the pace at which automation is happening, we are bound to be very alert and very proactive in updating ourselves and upskilling ourselves in technology, number one. Number two, widening the professional areas of practice. Always I see that most of the opportunities are there in metros and also for big entities, big firms. I don't know how many big firms are there in Bangalore. In my view, the big fours are less than 10%. The number of members in big fours are less than 10% of the total practitioners, and 90% of the practitioners are small and medium practitioners. On the front of revenue sharing, it is the reverse. 80 to 90% of the revenue is shared by big fours, and only 5 to 10%, or the 10 to 15% is shared by 90% of the small and medium practitioners. This I have been seeing for so long, and especially it is on the increase. So I am very much concerned that the small and medium practitioners continue to do practice, and also more and more youngsters should be willing to come to practice. Of late you must be knowing the statistics. More than 90% of the young CAs are joining the industry for employment and not coming for practice. So how to mitigate this issue? Beyond this, there are small and medium practitioners even in Bangalore. I am concerned about it. And also, the equitable growth that is required is not happening. The tier 2, tier 3 cities are finding it very difficult in terms of business, which is, even though every government after government, they are telling that the business activities should be done beyond Bengaluru. That is, beyond Bengaluru is one concept, tier 2, tier 3 cities and another concept and all. And on the contrary, before December 2025 December end, Bangalore expands by additional 57%. Just imagine what is the fate of the normal life in Bangalore. As it is, 40% of the heart attacks in Bangalore city are due to excessive pollution, that is because of vehicle and other industrial pollution. And life is risked, and also basic amenities are at risk. Still we need Bangalore. But my proposition, even recently we met the Chief Minister and we have made it clear that tier 2, tier 3 cities also should be supported, and through them, the small and medium practitioners can get the opportunities or clientele from MSMEs. So it is only micro, small and medium enterprises who can do the business. A micro, small and medium enterprise, if he wants to set up a business in Bangalore or in any other outskirt city, other part of Karnataka, only land cost may be 10:100 or 1:10 ratio. So that way, the businesses here can be made to let them have the head office here. You can advise your clients or the prospective clients or entrepreneurs to have their business units outside Bangalore by investing lesser amount in land and other infrastructure and develop in that area, and to highlight all such things. We have been conducting the programs, one-day program on MSME segment, how to strengthen the MSME segment. One such program is being held for the first time by SIRC in association with Federation of Karnataka Chamber of Commerce and hosted by Bangalore branch on January 6th at Bangalore FKCCI venue. So it is an opportunity. Second, I told you the technology part, and first is technologize ourselves and catch up to the new areas of practice. So catching up to the new areas of practice is possible if we come to know what are the opportunities that are there and what is the ecosystem of MSME comprehensively. That is possible by attending that conference. So it is a conference jointly with the CCI on 6th of January. All the players of the MSME segment are there, be it the chartered accountants, be it business entrepreneurs, prospective entrepreneurs, and various departments like industries department, both state and central government, and also NSIC, National Small Industries Corporation, which helps the business, and also other agencies like CFTRI and all, and very importantly, the bankers to tell how the MSMEs will be supported by them, and various schemes that are there, including for CAs and for women, all these banker schemes and also government schemes, both central and state governments, all these can be known by attending this. Maybe we might have not concentrated on those areas. I request all of you to register yourselves. Of course, the December 31st will be over, wherein the deadline of CPE is not required. But that's a conclave which gives you 6 CPE hours. More than that, lot of things which are there under your purview but not concentrated upon. So those things will be highlighted. And also in MSME segment, what are the small different categories of industries we are identifying, and we have 8 what's called yardsticks based on which awards will be given to those entities, and segment wise there will be around 25 to 30 awards that will be given along with a very beautiful cultural evening. So I wish you all to join the conclave on 6th of February. You will be receiving 6th of January. I am very eager about February because I want to come out of that position as early as possible to give the baton to Geeta. ಬಹಳ ಕಷ್ಟ ಇದೆ ಬೆಂಗಳೂರಿಂದ ಬಳ್ಳಾರಿಯಿಂದ ಎಲ್ಲ ಓಡಾಡ್ತಾ ಇರೋದು. ನಾನು ಐ ಹ್ಯಾವ್ ಕಮ್ ಹಿಯರ್ ಫ್ರಮ್ ಕೊಯಂಬತ್ತೂರ್ ಆ್ಯಂಡ್ ಗೋಯಿಂಗ್ ಟು ಹೈದರಾಬಾದ್ ಆ್ಯಂಡ್ ಫ್ರಮ್ ದೇರ್ ಟು ಅಗೇನ್ ಕರೀಂನಗರ್ ಆ್ಯಂಡ್ Warangal. It's a tough job, but having accepted, I cannot make complaints about it. I have accepted the challenge, I have met the challenge with the support of all of you. And one important thing is, at SIRC we did one program for automation of offices and upskilling the technological knowledge. I don't know whether these programs are continued at Bangalore branch. How many attended that, this one? No, how many attended that program of training? 4. Please prevail upon those 4 members and see that they conduct workshops, not the jatras like this. This is only for clarification of doubts which the star speakers like Annapurna madam can reach out to you. And as per the science of communication, beyond 8 feet, the speaker will not be able to reach the receiver. So I wish the workshops are conducted on that. And newer tools. We have created one team of technical experts, chartered accountants exclusively. And on this 9/9C also, we conducted one program on 14th. You know, rains lashed the SIRC also. There were almost 2 feet of water clogging in the SIRC whole building itself. And despite that challenge, we conducted one program, and which is recorded also, that can be made use of. And before, in 1 or 2 days, you can share that video to all of them. Technologically, the subject content is given by all the experts today. how to use advanced technology, save time, be accurate, that can be achieved by watching those videos with some above normal expertise in technology. That is one thing. And automation of offices is badly needed, because you know the new syllabus, only after passing the intermediate only they can join the articleship. And even if they join, how many of the students would choose MSME or SMPs, small and medium practitioners, is also a question. So we should gear up ourselves to mitigate these problems. And automation of office with minimum cost is another agenda on our cards. And last but not the least, compliance areas. I have seen many disciplinary cases, the hearings are being conducted at SIRC premises only. Out of 30, more than 25 would be small and medium practitioners for silly reasons, for small non-compliances. So there again, we are trying to create a model wherein how to follow accounting standards, how the drafting should be done for even non-corporate entities, and also how the auditing standards are to be complied, how we can escape from disciplinary proceedings on these areas. That also we are trying to do, and that will be given just in another 1 month or so before I demit my office in February. And another one or two ideas I have, I'll prevail upon the upcoming chairman also. I have the comfort of having the chairperson from Bangalore. And that also will be taken forward in terms of technology and also widening the practice areas. And those things, I seek your support in participation and upskilling yourselves, and continue to become tech savvy and also provide our professional services beyond the borders of our country. That is the agenda at ICI level, and that's why two world as in global level conferences were conducted last year in Mumbai and this year in Ahmedabad. And there the agenda is how to provide services from here, even from home, using technology to the entities across the globe. That will be the agenda. There also we will keep working. Together if we work, our profession prospers, our professionals prosper, and we will be contributing to the nation as in the form of both the services as well as containing the frauds, which is very important now, not only collection of revenues. We have been supporting the government on collection of revenues. Beyond that, even fraud controls also are very important. All these can be achieved if we technologize and become upskilled both in terms of technical knowledge as well as technology usage. So with these words, I thank you very much for this opportunity. We keep meeting and we keep updating. Together we can and together we will. Thank you very much.
Thank you so much, sir, for those wonderful words. Members, with this session, we have come to the fourth and last session for the day. Recent technical amendments under the GST law and practical issues while filing GST returns. Amendments either in law or rules or notifications, coupled with case laws in favor or otherwise of assessees, was very well dwelt upon in detail by CA Annapurna D Kabra, ma'am. A round of applause for that fantastic 3-hour session. Thank you, ma'am. On behalf of members present here and all the managing committee members of Bangalore branch, we would like to hand over a gift voucher to speaker as a token of respect and gratitude. Can I request CA Geeta AB, madam, Vice Chairperson of SIRC ICI, to come out to desk and then do the honors. Thank you, ma'am. Thank you, members. Good night.